Good morning and welcome to our 147th weekly webcast. Now, the way this call works is I first discuss the most important and interesting business news topics from the past week and how you can use the news and other strategies to enhance your career or make you a much better investor. Then what I'll do is I'll spend the rest of the 3-hour call taking your questions as usual. And I'll give away my $999 MBA Degree Program to one person on this call. And I'll explain how you can win this very soon. Now, over the past 147 weekly YouTube webcasts and the many MBA office hours and MBA Q&A sessions I've had, I've actually answered more than 10,000 questions live here on YouTube. It's been a blast. And I thought it would be awesome if you could type your questions and I could immediately answer them based on my 10,000 questions answered. So I want to quickly introduce you to a product of mine called Power Search. Now, the way Power Search works is you type any question up here or keywords on any business topic, and I answer them through either a video I've recorded on YouTube or in one of my lessons in my MBA program. So if you type, for example, cash flow statement and hit enter, you'd see a bunch of videos from my YouTube webinars as well as my MBA degree program. And you can click on this and go to directly that portion of the cash flow statement description within my MBA degree program. Now, if you're getting value out of this weekly call, please like, share, and subscribe. Also, you'll notice that on my website here, I mention if you're interested in beta testing my complete options course, which is coming out soon, and if you want to use the tools I've created to price options, and if you've used options before, please send me an email and I'll send you the spreadsheet that I created. It's taken me about a year to do. The email address is support@harounventures.com. All right, let's now move on to the news. Let's do a case study on a massive M&A deal just announced. Now, in this case study, what I'm going to do is I'm going to explain 3 topics. Part 1, meaning topic 1, is how Morgan Stanley and Goldman Sachs investment bankers structured the deal. Part 2, I'll discuss how hedge funds invested in the deal after it was announced in New York and Australia a couple days ago. And then what I'll do is in part 3, I'll talk about how the company conducted a brilliant quarterly earnings call to discuss this deal with investors. Now, I want to stress that we as retail investors legally have access to the exact same information at the exact same time that hedge funds do on deals. And what I'm going to do is I'm going to teach you today how to access and interpret the data very quickly, even faster than how the media does, so you don't have to rely on the media to tell you about what deals happened. And you can also interpret the deal data based on what I'm showing you, so you don't have to rely on anyone else's opinion. Okay, so the case study deals with technology payments company Square, ticker SQ, and Square's announcement to purchase the largest technology company in Australia named Afterpay. And the ticker on Afterpay is APT.AX in Australia. Now, Square is buying Afterpay for $29 billion, and it's an all-stock deal for about a 31% premium. And I'll run through the logistics of this deal as well. Now, the stock movements of both Square and Afterpay were fascinating and incredibly volatile over the past couple days. A lot of money's been made, a lot of money's been lost as well. So let's kick it off with part 1. The investment banking structure of the deal. Now, the CEO of Square and Twitter is named Jack Dorsey. He's the CEO of both companies, Square and Twitter. He's brilliant. And a couple of months ago, before the massive $29 billion deal here was announced, what Jack Dorsey did was he hinted to investors on public webcasts that Square might be looking to make an acquisition in the payments sector. And that's a smart move because by doing this, the shock of an announcement of a massive deal would not cause investors to panic sell. So listening to public webcasts was not just the investors that day when he had that webcast a couple months ago saying he was going to make an acquisition. But listening to that public webcast was also likely investment bankers from Morgan Stanley, Goldman Sachs, and Catalyst Partners. Now, Morgan Stanley is Square's investment banker, and they spoke with Goldman Sachs and Catalyst Partners about Square wanting to do a big deal. And as a result, Morgan Stanley, who advises Square, structured the acquisition of Afterpay. And Afterpay's bankers are right here, Goldman Sachs as well as Catalyst Partners. And if you're not, if you're not familiar with Catalyst Partners, it's run by a brilliant man named Frank Quattrone. He's the best technology investment banker in history. And every big deal that occurs, he's part of. Now, the premium that one company pays for another company in an M&A deal is usually 25 to 30%. And quite often, one company buys another company using their shares instead of cash or debt because they know their shares are overvalued. So it makes sense to use the overvalued shares as currency for the acquisition, especially in this market where valuations are egregious or quite high. So why did Square's share price rise a lot after they announced this massive deal? And why do they need to buy Afterpay? It was fascinating because Afterpay is not profitable, but Square is, yet Square's stock price went up a bunch. I'll explain why. So in terms of the background on the companies, we know that Square processes payments with those white little plastic things plugged into iPhones. They also have terminals as well. We know they process payments. And a massive growth market is payment processing now for those that are having financial issues, especially now during COVID. So Afterpay, which is also a payments company, they make a product that collects money from those having financial issues, usually in 4 non-interest-bearing payments. And this is called BNPL, and this is important. BNPL stands for Buy Now, Pay Later, and it's a wonderful growth opportunity for many companies. So Afterpay is not profitable, but Square is, and this makes the deal fascinating, especially how Square and Afterpay shares traded after the deal was announced, which we'll cover in part 2 of this short case study when we talk about hedge funds. And then in part 3, we'll discuss Square's brilliant investor relations strategy and how to analyze the deal. So when a deal is announced, by law, what happens is that companies have to tell all investors at the exact same time. The professional investors actually don't have an advantage over us retail investors. And the way companies tell all investors about a deal or a material event at the same time is they do this through a press release called an 8K. Now, we know that a 10K is an annual report, a 10Q is a quarterly report, and 8K is an important press release. Now, instead of us relying on the media to tell us about the deal, we can actually beat the media to it and analyze the deal much, much faster. And I'll show you how. So let's take a look together at the 8K for Square, where the deal was actually announced. I'll give you 1 second to set this up here. All right, let's go over here. And this is a treadmill I'll be talking about later on today. But what you do is you actually go to, I'll show you. Step 1, you go here to sec.gov. sec.gov. Okay. Step 2, what you do is you go to, and let me make this a little bit smaller so I can actually see the menu there. You go to more search options. And then step 3, what you do is you enter in the company name or the ticker here. So in this case, I'm going to enter in SQ for Square. Okay. Then we go down here to the 8K, this document here. And we open the 8K by clicking on the top link here. It's not the best website, it's government, but it works well. All right, so in this press release here, when we scroll down, we can see the terms of the deal. And the terms of the deal are that Square is going to purchase the deal. They're going to give shareholders of Afterpay 0.375 shares of Square. Okay, and I'll explain this in more detail right now. There's a lot to this. It's complicated, but it's fun nonetheless. So if I own 1 share of Afterpay, then I receive 0.375 shares of Square. Now, the deal was announced on Sunday, August 1st. So what we're going to do is we're going to analyze the deal based on the price that day and prices over the past couple days. So at that time, on Sunday, August 1st, let me just get to the price of Square here. And the way you do that is you just go to finance.yahoo.com. Let's go there from scratch together. And then once you're here, you type in SQ. Then you scroll down to historical data right here. Okay, great. So on Sunday, the 1st of August, the price was actually 247.26. July 30th was a Friday, so the price on Sunday was still 247.26. And we're going to go through some investment banking math in a second, and I'll explain this to you in more detail. Okay. Now, what I also want to do is I want to get the historical price of Afterpay. Okay, and so I went to Afterpay, which is apt.ax. That's their ticker here in Yahoo Finance. Then we go to historical data, and we see here on Sunday, the price was 96.66. So what I'm going to do now is I'm going to run through the logic on this deal and how the mathematics works per the investment bankers. So if we take Square's price on Sunday, August 1st, of $247.26, and if we take Afterpay's price of Australian dollars, 96.66, and we multiply them, what we actually get is 92.7225. Wait a second, we're thinking here that number, 97.7225, is not a 31% premium to the price of Square, of Afterpay, which was 96.66. So what's going on here? Well, the 92.7225 is in US dollars because $1 gets you about $1.36.12 in Australian dollars. So what we're going to do to put this into constant currency, meaning put it in Australian dollars, is we're going to take the exchange rate of 1.3612 times 92.7225 US, which explains the 31% premium right here. Now, please remember that number, 126.21, that Afterpay shareholders got. Okay, remember that number, 126.21. So what I want to do is I want to look at the 5-day chart now of Afterpay. So if we go here to Afterpay, and then we go just to summary, and we can look at the 5-day chart right here. Here we go, good. This is how the stock moved. Okay, so this is Sunday, Friday, Saturday, Sunday. Markets don't obviously trade on Saturday and Sunday. Okay, so what happened was the price of Afterpay jumped to 123.05. You see the black number on the right there. But wait a second, this is less than the $126.21 purchase price. Why is that? Well, it's because unless there is another company expected to bid for Afterpay, it has to trade at a discount to the price until the deal is approved. And the reason is that there's always a risk the deal will actually not get done. And usually what happens is with investment banking deals and with M&A, it takes about 6 months for a deal to close, just in case the governments in the United States, Australia, and other countries block the deal. And governments block deals if the acquiring company is getting too much market power because competition, we know, is great for the consumer. Now, in the financial technology market, the Department of Justice in the United States actually blocked Microsoft's acquisition of Intuit back in 1994 because Microsoft would be way too powerful in the finance tech markets. So let's now go back to the 8K here. Okay, so I'll go up here to the 8K. And I'm going to search here for 2022, and I'll tell you why in a second. Here we go here. All right, and there's a couple instances. Yeah, so it says here the closing of the transaction is going to occur in about 6 months, okay? In the first quarter of 2022, subject to satisfaction or waiver of such conditions, okay? So this is, we see a discount to the price that Square wanted to buy Afterpay at, and then eventually that discount will close, okay? Remember the time value of money. The discount will actually close once the deal is approved by the regulators, blessed, and it closes in the first quarter of 2022. Now, separately, if we search here for the word termination, okay, termination. we can see here, there's 7 instances. Let me get to the right part. Here it is here. Yeah. Okay, great. Yeah. So if the deal does not go through, then what happens is there's going to be an egregious fee that is going to be paid. I'm looking for it. I'm buying time here. Here it is here. There's going to be a $385 million in Australian dollars fee that Square is going to have to pay to Afterpay if the deal doesn't go through. Now, let's go back and let's talk about part 2. We're done with the investment banking stuff for now. Okay. So part 2. In part 2 of the case study, we'll talk about how the stocks traded as fast money accounts like hedge funds invested in the deal after it was announced in New York and in Australia. There's a lot of moving parts to this, which makes it a lot of fun. So what I'm going to do is I'm going to look at the 5-day chart again of Afterpay. Okay. And we'll see how the stock traded. Okay. A lot of money was made and a ton of money was lost as well. So if I go here, we see here that on that Monday, the first day it traded, the day after the deal was announced, okay, we see that that Afterpay's stock actually pulled back and closed on Monday, August 2nd, at $114.80. And this is way, way, way below the purchase price of $126.21. What happened? Why did the deal pull back? Well, the Australian market closes at 4 p.m. Sydney time, okay, which is 2 a.m. New York time. So when the market closed at 4 p.m. Sydney time right here, okay, so when the market closed at 4 p.m. Sydney time on Monday, August 2nd, the price of Afterpay was $114.80. And it was lower because Australian investors thought that Square's price was going to go down a lot when the U.S. markets open in New York, as this is a massive deal for a company that is not profitable. Square, we know, is profitable, but Afterpay isn't profitable yet. And so Sydney, again, is 14 hours ahead of New York. And here's what really happened, though, which absolutely shocked investors and made hedge funds lose and make a lot of money at the same time, depending on what side of the trade you're on. So what we're going to do is we're going to look at the 5-day chart of Square. Okay, so we go here to summary for Square, ticker SQ. We go to 5-day right here. Okay, and you can see here that on Monday, August 2nd, Square's price actually went up $20, which was shocking. It went up $20 at the open, and it closed the day at 4 p.m. New York time at 272.38 or so. And this is $25 higher, or 10% higher than the share price of Square when the deal was announced, because Square was $25 lower at $247. And recall the deal was announced on Sunday, August 1st. A lot of moving parts. So let's go through the math again a slightly different way. All right. So if we go through the math, 272.38, okay, times 0.375 times the FX rate of 1.3612 equals a price per share now of $132.78 for Afterpay. That's a lot higher than before. Remember that number. Okay, remember that number right there, 132.78. Now, if we look at the 5-day chart for Afterpay, let's go back there quickly. If we look at the 5-day chart for Afterpay, we see that when the stock opened the next day at 9 a.m. Sydney time on August 3rd, the price jumped to just under $130. There's a lot of moving parts when it comes to international markets, and when certain markets are open and certain ones aren't, and when it comes to also volatility given FX. So it didn't go up to $132.78 because, as we discussed a minute ago, these investment banking deals, they can take 6 months to close. And there's a risk that regulators might not approve of the deal. It's complicated, but it's fun because the Australian markets are open from 9 a.m. to 4 p.m. Sydney time, which is when the U.S. markets are closed. So there's an immediate arbitrage opportunity that hedge funds and quantitative funds transact on. They make a lot of money. And the way that hedge funds transact on this is as follows. What the hedge funds do is they have groups or departments within their hedge funds, if they're big, called event-driven groups or sectors. And so through the event-driven arbitrage trades, what happens is you have lawyers that work at these big hedge funds. And what they do is these lawyers often used to work for the government looking at antitrust deals. And these hedge funds and the lawyers in the event-driven department of hedge funds, if they think the deal's not going to go through, then they don't take part in the deal. But if they think the deal is going to go through based on their policy analysis, then what they do is they short in size the company doing the acquisition, which is Square, and they go long in size the company getting acquired, which in this case is Afterpay. And they make money on when that spread closes, if and when the deal is approved 6 months later. It's deadly, though, because you can lose a fortune if you don't do it right in a hedge fund, but you can make a lot of money, too, if you lever up. So let's now move on to part 3 of the case study, as we're going to talk about how Square conducted a brilliant quarterly earnings call to discuss the deal with investors. So here's a few reasons why Square's price opened much higher than expected on Monday morning, August 2nd, New York time. Now, what I'm going to do is I'm going to show you Square's investor relations website. And whenever you want to look at investing in a company, you have to go to the investor relations portion of their website. So let me tee that up here quickly. So let me go here and let me just go from scratch. So if you go to Google, Square Investor Relations, you can get access to their investor relations website. And this contains tons of free information that we can go through to thoroughly understand how the company is doing from a financial perspective and a qualitative perspective, as well as what their strategy is. So if we go here to Square's investor relations website, we could see when we go to events and presentation, if we scroll down, we can see that before the market opened, okay, on Monday, August 2nd at 8 a.m. New York time, before the market opened, they held a conference call with investors, okay? And in this webcast conference call, they did an amazing job of explaining the massive Afterpay deal to investors. And what they also did, which was genius, was they also released earnings at the exact same time. It's a brilliant strategy to announce earnings and the details of a deal at the same time and before the market opens. So what you can do is you can make investors feel great about the deal instead of panic selling. So here's how it works. Large publicly traded companies have investor relations departments. And these companies release earnings every quarter, meaning every 3 months. And quite often they hold a conference call to talk about the results. And the quarterly results are also in a press release. And anybody can listen to the conference calls online, and anybody can get access to the press release as well. So let's go here. I want to go back to Square's homepage for their investor relations website. And what I want to do is I want to open up a document that they shared with investors and went through during that call before the market opened on August 2nd at 8 a.m. So right here, we've got a document called Square Plans to Acquire Afterpay Transaction Overview. And this is fun. Now, here, this is a 27-page deck that was created by Square and the investment bankers to convince shareholders or articulate to shareholders that the deal makes sense, okay? Now, what I'm going to do is I'm just going to jump through this quickly. I'm going to go to page 5 here. And here we can see that the total addressable market for online payments and the BNPL market, buy now, pay later, is $10 trillion. Okay, and BNPL, meaning buy now, pay later penetration, is only 2% of this right now. So here, BNPL. That's a big deal. So next up, let's go to slide number 9. And what we're going to do is I'm going to look at the revenue. Here it is here. Cool. All right. Here on slide number 9, we see that Afterpay's revenue growth is an astonishing 92%. It's unbelievable. This company is growing like a weed. And let me wrap this up by going to slide 15 here quickly. On slide 15 here, we can see that the integration of Afterpay's technology is really easy to do as part of Square's Cash app. See right here? It's really, really easy to do. And all this stuff is getting Square investors excited about the deal, even though Afterpay is not profitable yet. Now, what you can do is you can always go to Square's or any investor relations page and listen to events. Okay, what they do is that they put these webcasts up and they leave them up for usually a couple weeks. So you can listen to a replay of the whole thing. Anybody can do it. All you have to do is put in your name, register, and you can listen to it. And when you listen to these calls, what I want you to please do is I want you to listen not just to what the management says, but more importantly, I want you to listen to the questions that the analysts from the big investment banks ask during the Q&A portion. These calls are usually 45 minutes. The first half hour or so is the investor relations person and the CEO and CFO talking about business and how the quarter went. And the last 15 minutes, the top investment banks analysts ask questions. So you can listen to this anytime. Okay. In the replay, they also talked about in this conference call the quarter they had, and they materially beat earnings actually in the quarter, given the growth of their cash app. So what happened was, in hindsight, this made investors feel more comfortable with the fact that Afterpay is not yet profitable, and the earnings they beat earnings by a bunch. It actually offset a lackluster net revenue print or result for Square, because Square was adversely impacted by the volatility in Bitcoin's price. But the bottom line here is that the timing of the deal and the timing of the announcement of earnings and the deal at the same time was brilliantly executed. Now, if this was helpful, please like and subscribe, and thank you. All right, give me 1 second. Go back here to my next slide. Get a little sip of water. All right. That was a fun one. A lot of moving parts. If you have questions about that, please type the questions now as well. I've worked on tons of deals over the years, and I want to humbly help you understand how this works. And don't rely on the media ever. Ever, ever, ever. Always go right to the source, sec.gov, or to the website of the company, meaning investor relations. And I give you a lot of tools in my MBA program to be able to analyze these companies, create financial statements as well. No one is smarter than you. You have access to all the same information that the big hedge funds do. All right. Companies are staying private much longer than they used to. And instead of doing an IPO at a valuation of $1 billion, pre-IPO companies are waiting longer to go public. And what they're doing is they're doing monster IPOs instead. For example, Palantir waited until its valuation was around $20 billion. And when I worked in venture capital, I invested in this company when it was private. I'm no longer a shareholder. Also, Robinhood's deal was around $30 billion. And Robinhood had an amazing bounce back. So what happened on day one of the Robinhood IPO, which I discussed in a previous vlog, is that the stock actually closed below where the investment bankers thought it was going to close that day. And the reason why I think it closed below was because what Robinhood did was they gave 300,000 shares to their customers. And a lot of their customers are traders. And so those customers flipped the stock or sold it quickly that day to try to book a profit. And then they got the tourists out of the stock after a couple days. The deal stabilized, and now the company is up 100% since the IPO. All right. And also another example of a company waiting much, much longer to go public instead of going public at $1 billion valuation. Another example here is Coinbase, which we've talked about in a previous vlog. And I am a shareholder of Coinbase. I've known the company for years. I met with Fred Ursum. I had him at a conference in my office years ago. He was the founder. He's no longer there. Okay. But what's happening is, since a lot more money is being made now by venture capitalists and less money is being made on IPOs for hedge funds and mutual funds, what's happening is many hedge funds and mutual funds have been investing in private companies instead of just public companies. And what this is doing is this is driving up the valuation of private companies and is really upsetting a lot of top venture capitalists. And I was at a Goldman Sachs conference here in the San Francisco Bay Area, and in the audience were hundreds of mutual funds and hedge funds. And on the stage, a Goldman analyst was interviewing one of the best venture capitalists ever, from a firm called Benchmark, and his name is Bill Gurley. And Bill Gurley looked at the audience that day. I'll never forget this. All right, he's full of confidence. Love the guy. He looked at the audience and he said this: all of you hedge fund and mutual fund investors, stop investing in private companies because you don't know what the hell you're doing. It was awesome. It was great. And actually, Bill Gurley and I, we worked in the same building, and I shook his hand once. He's like 10 feet tall. But the reason why Bill Gurley is making these comments is because the hedge funds and mutual funds can't justify their high fees anymore, because great tech companies are going public later, and more importantly, a lot of mutual funds just can't outperform ETFs anymore. And we know that ETFs have much lower fees than mutual funds. And I think that a valuation bubble is, of course, emerging with many private tech companies. And the hedge funds and mutual funds are to blame, as more than 40% of venture deals are now done by mutual funds and hedge funds. All right. Oh, this one's going to be fun. All right. I love learning about business from movies, man. Okay. I love edutainment, and learning about how business works by watching movies and TV shows is so much fun. So what I want to share with you are my humble top 10 business movies based on my thoughts, and my favorite shows as well to watch to learn about business while being extremely entertained. So number 10, we have Wall Street. And Michael Douglas got the Academy Award for Best Actor for playing a greedy, unethical capitalist Gordon Gekko in 1987. And we can actually learn a lot about ethics in business and what is wrong about insider trading, okay, by watching this masterpiece of a performance. The problem, though, is this. So many Wall Street veterans over the past couple decades, they watched this movie over and over and over again when they were younger, and they saw Gordon Gekko, meaning Michael Douglas, as a hero. And you can argue that the 2008 crash was due to the influence of the greed of Gordon Gekko. And Michael Douglas actually hates this. He hates it when he's in New York, where he lives, and many Wall Street executives come up to him on the street and say, "Thank you. Your movie influenced me to get a job on Wall Street." And as with all Hollywood movies, the rich dude loses in the end. It is what it is. Number 9, The Wolf of Wall Street. Leonardo DiCaprio's performance was brilliant here. And this movie had some pretty funny parts as well. And this is another movie to watch to learn what not to do when it comes to investing. And the crazy thing is, though, that many people watching the movie want to work in the investment industry because of it, and how it seems so much fun to work on a trading floor. And what really bothers me, though, is how the criminal that DiCaprio plays in the movie, named Jordan Belfort, this criminal in real life is admired now by so many wannabe Wall Street investors. Number 8, Too Big to Fail. This one is awesome. This masterpiece explains, in layman's terms, what really happened in 2008. And I think the best way to learn about the 2008 crisis is to watch this movie called Too Big to Fail. And Paul Giamatti's performance playing Federal Reserve Chairperson Ben Bernanke was amazing, okay, as was William Hurt's portrayal of Treasury Secretary Hank Paulson. And the movie was written by Andrew Ross Sorkin, who is the best finance journalist on the planet. He really does his research. And this brings us to number 7, which is TV show Billions, which is also created in part by Andrew Ross Sorkin. Now, I used to work in the hedge fund industry, and the criminal Bobby Axelrod in the show, he represents a criminal hedge fund billionaire in real life, and many of the episodes are actually based on real events that occurred that we know about involving other billionaire crooked hedge fund owners. And Paul Giamatti, he plays the role of the district attorney brilliantly on Billions. And his character is actually based on 2 people. The ethical part of his character is based on Preet Bharara, and the unethical part of his character is based on Elliot Spitzer. You can Google both those names if you want to. Number 6, if you want to learn more about private equity and how the industry works, then you can watch a movie called Other People's Money, because Danny DeVito here, he plays the part of Larry the Liquidator. It's a fun movie. He plays the part of Larry the Liquidator, who works in private equity. And Larry the Liquidator in the movie wants to dismantle a company as it's worth more dead than alive. Number 5. Oh, this is a goodie. Number 5 is Succession. Okay, it's a TV show that's actually loosely based on the Murdoch family, and it's a fictitious show, though, about a family that owns a media empire, and the acting is off the charts, especially from Kieran Culkin, who's one of the 8 million Macaulay Culkin brothers. And the acting is also awesome from Brian Cox, the guy standing up there, who plays Logan, who's the head of the family. You know, the first generation makes the money, the second spends it, and the third has none. Number 4 is Francis Ford Coppola's iconic film, Tucker, which is a true story, actually, about a guy that tries to take on the big 3 automakers. And Jeff Bridges is so awesome in this movie, and it is so inspiring as well because he has a positive attitude like all great entrepreneurs do. Number 3 is TV show Shark Tank, which is about, we all know, which is about several high net worth investors, including Mark Cuban here, doing mini case studies about investing in startups. Now, the quality of many of the questions asked is how real investors approach investing in startups. So when you hear the types of questions they ask, they usually ask about the size of the market. Take note of that. And when you try to raise money or write a business plan on your company, just take note of the questions they ask, because this is pretty real. Now, the way it works in this show, the way it really works, is each startup pitches an idea for about 10 or 15 minutes. And I've met people that have gone on the show. And the reality is this, though. The pitches are often 1.5 to 2 hours long each. And then in post-production, the show's editors only keep the most entertaining 10 to 15 minutes of the startup pitches. Number 2, The Social Network. I can't think of a better actor to play Zuckerberg than Jesse Eisenberg. And all of Eisenberg's movies are great. But in this movie about Facebook, you see how being unemotional in business can help you a lot. Okay, although I'm not a fan of the unethical nature of how he screwed over his friends who co-founded Facebook with him. But you got to be unemotional in business if you want to succeed, especially in the stock market. Number 1, last but not least, and this is surprising, but this one is Jerry Maguire, because in this movie you actually feel the pain of the business person working in an awful bureaucracy. And he, Tom Cruise in the movie, Jerry Maguire, and he thinks with his heart, and he quits to start his own company. I love the passion of the movie. And I had to make this one number 1 because it was actually the first date movie that my wife Christine and I went on. And she loved the romance side of it, and I love the sports and entrepreneurship side of it. And throughout the movie, there are very, very small clips of this fictitious motivational speaker named Dickie Fox. And what he does is he kind of mentors Tom Cruise in the movie. So if you have time, please search YouTube for Dickie Fox, Jerry Maguire, because Fox said one thing during that movie in 1996, years ago. He said one thing that really shaped my outlook on life, which is this: if this is empty, this doesn't matter. All right. Cool. And you might be wondering about, how do I get these images for these presentations? So what I do is I have a couple services I subscribe to. One is called storyblocks.com. It's about $100 a year, but this is what I do. I also use images from Adobe Photostock. I license them. And you can also go to Wiki Commons and do a search on anything and use any picture you want for free that Wiki Commons lets you to. So for example, if you wanted to include a picture of Reese Witherspoon, which I'll include shortly because I'm going to talk about her in a minute, what you do is you search for Wiki Commons, Reese Witherspoon, and you can find out all 4 pictures of Reese you can use, for example. Here are 5 tech gadgets that I use to help me accomplish much, much more at work. Number 1, I have a desk right here that moves up and down. And I also bought my employees this desk as well. And I personally find that when I work standing up, I accomplish a heck of a lot more. Now, my YouTube viewers actually, I'm very honest and open and transparent, as you know, but my YouTube viewers complained earlier this year that I actually sounded tired, okay? And remember my old setup, I used to sit down. So what I did was I got rid of my chair in my office, and I stand and I walk all day in this room. I'll get to the walking part in a second. But the desk I use here is called a Jarvis desk, and I purchased it at fully.com. And let me show you this. Let me go over here. I'll go over to here. And if we go here, and y'all know I'm not sponsored by anybody, I never will be. Okay, put the student first. But if you go here, you can click on standing desks, and you can completely customize these desks as well. And you can customize it with wheels on it as well, which is what I've done, just in case you want to move the desk and work from another room in your house. Now, there are certainly cheaper alternatives that are just as good, if not better, but I love the fact that my desk goes up and down. Number 2, I bought the cheapest walker that I could find. And what I'm going to do is I'm going to go to my Amazon orders and show it to you. Okay, so I'm going to go to orders here. Too transparent, I know. Orders, right here. And the best one you can use is actually, let me search here. Treadmill. Here it is here. Yeah, okay, good. Yeah, so right here, I bought this one here. And you could slide this actually under your couch if you want to. It's got wheels on the side as well, okay? And I get 20,000 steps every single day using this product right here. Because, as I mentioned before, if you treat this right, then this works much gooder. Yeah. Now, I'm actually way more productive. Let me get back on track here. I'm way more productive this way, walking right here in my office. And you don't realize you've actually taken 20,000 steps per day when using it. And I feel like I'm fresh all day long when I use this, especially in the afternoons. And with all of my one-on-one meetings using Zoom, I do lots of them, I'm walking on this at the same time. So what happens is while you walk, you get your work done and you get your exercise done at the same time, and you think much clearer, of course. Number 3, this one is out there, okay? This one's out there. But I humbly believe that if we don't get enough light, then we can feel depressed. So what I do is I use this product here, made by Morocco, called Light Therapy, okay? And you can turn it on and off to different light levels, and even with a timer as well. Now, this is certainly no substitute for vitamin D and the sun. But some, and this might just be a placebo, I don't know, but the 10,000 lux that this light gives you the feeling that it's sunlight you're feeling without the UV. And I actually have it above my head right here. I put it up here and I put it on a timer as well. Okay. Now you know why your mom and dad always turn the lights on when you're watching TV. All right, number 4, any noise canceling headset. You know, I've used Bose, Sony, the new Apple ones, and they all work well. Plus, if you're sitting at your desk, it looks like you might be on a call, and it can also let people around you at home or at the office know that you're really concentrating. And these things here, and this is an older Bose model, I certainly got a lot of use out of it. These things here, they block some of the noise. And what I do is I often listen to music by Hans Zimmer from his epic movie soundtracks like Interstellar, which puts me into a great work zone, so to speak. Number 5. Now, I'm trying very hard to improve my posture, right? My posture is not great. It's getting a bit better. And when you see your kids using an iPhone and they're looking down all the time, or an Android handset, just tell them to pretend you have a grapefruit under your chin so you can keep it up, your back posture up. So what I do to improve my posture is I use this product here called Upright Go, okay? And this thing, all it does is it vibrates, and you can set it up on your phone too at different levels. It vibrates, a little vibration, after 5 or 10 seconds if you're not sitting up properly. And this has really helped me a lot. Only buy this when it goes on sale. You can get it on sale for $60. Now, what I find though is the issue with this when you buy it is it comes with adhesives you stick on your back. and you could lose it easily in the laundry. So I bought this cheap necklace thing here, okay, which is magnetic, and I wear this. I find it really helps because once your back goes, if it goes, it can be so painful to try to work. All right. When you join a private company, quite often you have the choice to receive more cash for your salary or more stock options. I humbly suggest always ask for more cash, okay? Always take more cash, because if the company goes public, and most startups never do, but if the company goes public and does very well, you're going to be given way more shares in the future anyway when it comes to compensation. Now, you don't want to let your employer know that you don't want any options, because that could, of course, signal or make it look like you're not committed to the company. But if you have a choice, always favor more cash, as you're going to get more options later anyway if the company does well. So how do stock options work? Well, most companies give you options every single year as part of your compensation. And if the company is public, you're actually not allowed to cash in those options until 4 years later in the future, until they vest. Now, companies do this as a way of giving you golden handcuffs to incentivize you to stay at the company. So if I get stock options every year and I want to quit, I know that if I quit, I'll never get the money unless I stay for 4 years. And you get shares every year in most cases. Okay. Now, these options aren't just given to you because you still have to actually buy them in many cases at a discount price, and then you can sell them. Let me explain that in a second. For example, let's say a stock of the company you work at is currently $4, and you're given options that you can cash in or vest. You're given options that you can vest in 4 years at a strike price of $3. Well, this means you have to buy the shares at $3, and then you can sell them if the stock is, of course, higher than $3 in 4 years. Now, with private companies, the options you're given are often well under $1 per share. So let's say you get options. Say you get 1,000 shares today at a private company, and the strike price is 25 cents per share. And in 4 years, the company is public at $20 a share. Then that means in 4 years, you can buy the shares you can buy 1,000 shares times 25 cents. And that'll get you, you'll purchase them for $250, and then you sell them at $20 per share, which will net you $20,000, assuming the company ever goes public. Now, you have to be careful, though, to understand if you can get diluted, though, if more shares are created by the company in years 2, 3, and 4. So if you're given shares in year 1, just understand there's a chance the company can create tons more shares in years 2, 3, and 4. And by the time you cash in your shares in year 4, it might be worth a lot less because of dilution. And so here's what I recommend. I always recommend consulting with a lawyer to read the compensation offer letter before you sign it. And you can access an affordable lawyer at LegalZoom.com. And you all know I'll never have sponsors in my videos, as I always want to put the student first. Thanks. All right. Oh, this is a great one. All right. Let me do a little check here. No complaints about the audio video. Okay, we're good. Excellent. Thank you. Don't expect to accomplish your dreams in life unless you help others accomplish theirs first. I think that when you mentor other people, not only is it a good thing to do, but it also reminds you of what the steps for success are, because when one teaches, two learn. And when you mentor other people, you are, in essence, getting experience managing people as well, as you're helping them manage their careers so they can reach their full potential. Now, the problem is with a lot of companies, the problem is that people are often promoted to management if they're very good at their job. However, if you're a great programmer or a great trader on a trading floor, does that really mean you're going to be a great manager? No. So before you get that promotion to manage other people, I humbly recommend being proactive in helping to mentor other people So the next time you see a new employee in your company, grab a coffee with them in the first few weeks of their employment and help them. And not that it matters, but upper management will see the impact you have on others, which will help your career in the long run as well. Or the next time you see someone, or the next time somebody sends you an email asking for a Zoom call or a coffee meeting, take that meeting and help them. Because if you give, you'll receive. And that's prophetic, and it's been true since the beginning of time. And so in summary, don't expect to accomplish your dreams in life unless you help others accomplish theirs first. All right, this is the last one, then I'll move on to questions. If you want to get something done, give it to a busy person. Reese Witherspoon just sold her 5-year-old company called Hello Sunshine for close to $1 billion to global investing giant Blackstone. So how does she do it? I mean, she's a superb actress, an amazing producer, an incredible business person. She owns many companies, and she's also a wonderful humanitarian. Well, when asked about her tremendous success in business, she mentions that she's a voracious reader of business books. And so instead of all of us reinventing the wheel, it's important for us to read or listen to business biographies so we can reach our full potential. And readers are leaders. And she actually once said, "I get crazy in a bookstore. It makes my heart beat hard because I want to buy everything." And she's so awesome. She even attended Stanford University, majoring in English literature. Now, her company, Hello Sunshine, produced The Morning Show, Big Little Lies, and Little Fires. And her company, again, was only founded about 5 years ago. And she often mentions that she created her company on the ideals of changing the way women are seen in the media. And I think that when you chase your passion and you think with your heart on how to make the world a better place, and if you don't give a damn what other people think of you and you take a risk, then great things happen, okay? What happens is you build your empire, and the money can follow accidentally if you think with your heart first. That's right. If you chase money, you lose your dreams and your money. But if you chase your dreams and you don't give a damn what other people think of you, your dreams come true, and the money often follows. But the key is that we understand that we only need to be right in business one time. So please embrace failure and maintain a positive attitude and say hello to sunshine. All right, that was fun. It is now time for questions. And so as you all know, you just type your questions in YouTube in the chat. And what I do is I answer the questions in the order in which I receive them. Please don't type in an internet address, because what happens is YouTube, for some reason, they block that. Okay, you can't enter URLs. So if you want to enter a URL, just spell it out. Instead of doing CNN.com, do CNN space DOT.com. Okay. And if I miss your question, just paste it again, because I do have senior moments. Yeah. All right. Right to the top here. And I saw a bunch of questions were entered in last night, and I came back this morning. I don't see them. YouTube will strip out all the comments if they're asked like 12 hours before. Thanks. Okay. First up, I got the Aquahood, who is Michael from the United Kingdom. Great guy. He grew up with Sacha Baron Cohen in the United Kingdom. So Michael wrote, will people be able to send or donate books to the Rwanda school? Chris, thank you for that. Will there be an address that people can send to? I appreciate that. Thanks so much. Definitely, once we get the entire structure done, we'd love to take any sort of donations in terms of books. Next, what we're doing is we're building the computer lab first, and then we're going to build the other 4 buildings, which will include a library as well. God bless you and thank you. Next up, I've got ePronto. God, I'm hungry here. Get some breakfast. This is my kale smoothie. I make 7 of these every Sunday, 1 for each day of the week. It's good. All right, so ePronto from Toronto is saying, hi, Chris. I'm happy to be back to this week's webcast after I took my family vacation last week. Hope you and your audience are doing well. Thank you. Thank you. Likewise. Hope you're well rested. Seems like things are getting better in Canada too now. Next up, Daniel wrote, hey, Chris, hope you're doing great. Likewise. I'm pursuing the on-demand MBA, and it's going well. Awesome. As you go through today's M&A strategy, can you touch on principles first and main objectives as a consultant? Thanks. Yeah. So what I recommend in the fourth semester, and the second EMS lesson, Economics Management and Strategy, so EMS 4-2, in the fourth semester, in the second EMS lesson, Economics Management and Strategy, I provide you with a 100-step template that takes greatest hits of all consulting frameworks I've ever used and created as well. So you can analyze any company. Thanks. Okay. And if you're curious about what it's like to be a consultant or work at any type of company, I recommend going to this website called Vault Reports. It's superb, and let me show you this to you because this is applicable to everybody on the call here. So what you do is you go to Vault Reports, okay? Vault Reports, and I use this to get a job at Goldman and a bunch of other companies in the past, and consulting as well. So you go here, and what you can do is you can buy a lot of PDFs for companies that you want to work at. And these PDFs will tell you what questions they're going to ask in the interview anyway. What you can also do is you can actually get case study books here called Vault Guides. And you can practice with your buddies here as well when you do consulting interviews. These guides are amazing. And again, you can get them for a lot of different companies as well. You can also go to glassdoor.com to find out the questions that might potentially be asked in an interview. Okay. All right. Next up, ePronto wrote, as a novice equity market investor, I had my first victory this morning. A company I was an early investor in got acquired and the stock doubled. Congrats, man. That's awesome. Nicely done. Is this what it means when an exit occurs? Yeah. So in an exit, so the way you harvest an investment as a venture capitalist or a stock market investor, the way you make a lot of money is, if somebody acquires the company or if it goes public. So that's great. You had an exit strategy. Nicely done. Okay. Next up, ePronto said, "What happens with the stock of the acquired company in case I decide to keep it?" Thanks. Yeah. So if it's an all stock deal, which is what happened with the ePronto deal with Square I talked about this morning. If it's an all-stock deal, once the deal gets approved in 6 months, if it's a big deal, once the deal gets approved, then your shares will get converted into the shares of the company that's doing the acquisition. Yeah. Okay, next up, Shock Rollo wrote, "Hey, Chris, I couldn't attend a few of your previous webcasts. Just started listening to the recordings. Thank you. Good to see you, and thank you for the icon as well." And Shock Roller wrote, "You used to be a programmer, right?" I did, yeah. I'm just curious about what language you used and what kind of products you worked on. Thanks. Yeah, no, thank you. I love programming. I felt like I was in a zone. 12 hours would go by when I was programming. I didn't even realize it. I loved it. There was this incredible cerebral intensity we had at Accenture when I worked there coding. In terms of the product I used almost all of them, but I'm going to date myself. So I started with COBOL, which sucked, right? And COBOL is Common Oriented Business Language. It's kind of like SQL, right? But it's all mainframe stuff. And I used that at Accenture in '94 when I worked on the merger of Manulife and Confederation Life. Then I moved on to C++, which I didn't like because it was object-oriented. It wasn't as much fun for me. I did a lot of Visual Basic as well, including VBA and Excel. Did a ton of Microsoft Access stuff, a lot of SQL as well with Sybase and SQL Server. They're basically the same product, but Sybase was for Linux or Unix, I should say, and SQL Server is for Windows NT. I did Java as well, which I hated because it's object-oriented and it's not that robust. Not JavaScript. I did that as well. What else did I do? I played around with Python a bit. It's kind of new for me. I don't really know what I'm doing there. I like the whole no-code movement where you drag and drop objects. I love that. And I think that the reason that Microsoft bought Mojang, and I wrote about this in Wired Magazine and other publications years ago, but the reason that Microsoft bought Mojang, which owns Minecraft, is because when you ask a lot of kids, what is Microsoft? They'll say, oh, it's Xbox. It's a gaming company. And when kids use Minecraft, I think it's healthy for them, right? Because when they do it, they're kind of programming. How? Well, it's object-based, and they pull a switch, which is like an if-then statement, which opens a door, fires a cartoon missile, whatever it is. And so I think Microsoft is going to view Mojang as kind of like a software development platform of the future. And hopefully they're supposed to actually make it part of the HoloLens as well. So you can make Minecraft buildings at home, whatever, on the walls, fridge, whatever it is. And that's a software development kit for kids, I think. And as those kids get older, I think Microsoft will have another software development kit that uses some of the aspects of Minecraft and Mojang. Yeah. And so I think that was the most important acquisition Microsoft did since MS-DOS. Yeah. Okay. And my clients, when I did it, were like I did a lot of offshore banking as well. I was on a team that we built an offshore bank in Barbados for the Canadian Imperial Bank of Commerce, and we used Sybase, SQL Server, Visual Basic, Microsoft Access, etc. Yeah. Okay. All right. Next up, I've got Steve. Hey, Steve. Steve wrote, "Hey, Chris. Hope you're doing great today. Likewise, thank you. Every day is great." And then you wrote, "Thanks for your amazing webcast every Thursday. Thank you, and God bless you, and thanks for being here." My hair is getting a little bit long here. Yeah. Let me get a haircut. Yeah. All right. Steve wrote, "Please, what is your view of the super upward movement of Robinhood shares? Do you suspect any pump and dump in the offering?" Yeah. So what happened was this. It was kind of experimental for Robinhood because what they did was they gave 300,000 shares in the IPO to their customers, which wasn't the smartest thing to do. But I think they kind of did as a peace offering, given the fact that people were upset with them manipulating the market a while back when it came to GameStop and hedge funds covering positions. And so as a peace offering, Robinhood, ticker HOOD, cool ticker, what Robinhood did was they gave 300,000 shares to their investors, to their customers. And a lot of their customers are fast money traders, right? And this wasn't the smartest idea. It was great peace offering from a peace offering perspective, but from a volatility perspective, it's disastrous. And so a lot of these people, these 300,000 customers who got the shares that day, they're traders. They got rid of it. They sold it. And so it was a broken IPO temporarily. Okay, it closed below the IPO price. And once we got rid of all the tourists in the stock, so to speak, the people that were renting it, the short-term people, the traders, then the institutional money came in and bought the stock in size. And now it's doubled since the IPO date. And for more details on the Robinhood IPO and how investment bankers think about deals and how they structure the deal, you can always go to I'll do this quickly, always go to my website and search for anything up here. So you can search for Robinhood right here. Yeah, here we go, Robinhood's IPO. And you can watch that. I talk all about the deal in a lot more detail. Yeah. It's fun doing live case studies. Yeah. Okay. Next up, Jay. Hey, Jay, how are you? God bless you, man. It was awesome exchanging emails with you. Expect your refund to get processed within a day, and also enjoy that free course. And I'm looking forward to doing a Zoom call with you as well. Yeah. And in the email, I'll send you details. Remind me on the Zoom call so I can talk to you. Thanks. Cool. All right. Next up, Pearl wrote, "Hi, Chris. I'm watching from Zambia." Excellent. Welcome. Great to have you, Pearl. Then we got Lionel who wrote, "Good morning, all. A pleasure to be here. Thank you. Appreciate it. Chris, your opinion on Facebook ads, direct marketing, finding an editor for the book that you use for your template." Yeah, a couple questions there. Absolutely, yeah. So you can't avoid Facebook. I've tried. You can't. And this is an astonishing statistic, but more than 40% of people on this planet, more than 40% use at least one Facebook product every month. And so from an ethics perspective, I tried to avoid Facebook. I don't post personally anymore on it, but you can't avoid it because it's one of the most cost-effective ways to advertise. You know, the return on investment advertising on Facebook is way higher than doing it on YouTube or using Google AdWords. Yeah. So you can't avoid it. Yeah. So from a direct marketing perspective, I think that makes a lot of sense to embrace Facebook. Yeah. I hope antitrust breaks them up soon. The problem with the antitrust department in America is they're trying to break up all of big tech at the same time, right? And that'll take forever. I think they should first of all break up Facebook, and then focus on breaking up Amazon and the others later. Yeah. All right. Next question is, how do you find an editor for your book? I used your book template. No, yeah. Thank you for using. And by the way, if anybody wants to write a book, what you can do is you go to my website, harounventures.com/all lowercase write book, and it's a free template. You can download it here that I use to create all of my books. In terms of finding an editor, usually they find you if the book is doing well, if you self-publish, that is. So for example, with my book, my first book back in 2015 called 101 Crucial Lessons They Don't Teach in Business School, what happened was Obama's publisher approached me, and I was excited at first, but I didn't do the deal, and here's why. They would own the entire book and all the content forever, right? Not me. And they wanted to jack up the price a lot and only give me about $1 or so from each book sold. So I want to give up control. Yeah. All right. But what you can also do is write your book, and then once you publish it, you can send copies to the big editing companies out there. Just do a search. A lot of them are based in New York City. Yeah. Okay, next up, Steve wrote, wow, Chris, you're really looking brilliant and sharp today. Thank you. It's fun playing adult. Yeah. A great one, sir. What's the deal? Secret. Yeah. So what I'm trying to do something different. So you guys can see here that the background's different as well. I've got what's called DMX lighting, right? So I'm playing around with the user experience here and trying to change it up. And what I do with the lights is I set up pedals. Because I'm a one-man show here when I do this thing. I set up pedals so I can turn everything on and off with pedals. Clearly, I'm a nerd. I can put on some dramatic lighting on one side or full lighting. Yeah, bit of a nerd. I know. Yeah. So, but I'm trying to do something a little bit different. And I'm trying to make the look and feel of this weekly webcast, the beginning part at least, a little bit more editorial, a little bit more news related. Every story I do, there's 7 at the beginning of every webcast. They have to fulfill one of the following 2 criteria. Number 1, it has to help you understand how to make money how to make more money as an investor. Or number 2, it has to help you take your career to the next level. So I always ask myself 2 words: so what? The so what moment is it has to add value to my students. Yeah, and I'm trying to make it look and feel like a broadcast studio. Yeah. Okay. Next up, hey Rose, how are you? Rose graduated from my MBA degree program last year. She's awesome. She was editor-in-chief of the yearbook as well. I don't have the yearbook in my office, but it's amazing. Rose, great to see you. Rose is from the great state of Virginia. Thank you for that comment there. Loving the outfits you said. Thank you. Next up, Andrew Dupree, how are you? You mean Dupree. Andrew is from Toronto. Great guy. He was the very first person accepted into my MBA program back early in 2019 when I thought about launching it. Yeah. Great guy. His son is a star basketball player and potentially the #1 prospect in all of Canada. And that's a big deal because, the Raptors rock. Yeah. Good to see you, Andrew. Hope you're doing well, brother. Yeah. Next up, Luis wrote, hey, Chris, what a great analysis. Well done. Thank you. Appreciate it. I actually felt it was the way I articulated the deal, Square buying Afterpay, I could have been a little bit more clear. I challenged myself to try to do it live, going to different websites and stuff. So I apologize if I confused anybody. And if anybody has questions, please let me know. Thank you as always. Okay. Quick question you wrote here. What does Affirm stock arouse with the deal? Square Afterpay was announced. I thought it would be exactly the opposite. Yeah. The reason that Affirm stock kept going up is because the way the deal works is for every share you own in Affirm, okay, for every share you own, you get 0.375 shares of Square. And so if Square goes up a ton, then the shareholders, their stocks can go up a lot as well. It comes now to merger arbitrage, and a lot of event-driven funds are going to work on compressing that spread by the time the deal is approved by regulators in Q1 of 2022. Yeah. Okay. Next up, Manas. How are you? Manas from India wrote, "Good morning, my dear mentor. Call me Chris, please. Hope all's well. Likewise. How is the Rwanda work going? How's Vital doing? Really keen about the work. It's great. We're moving the ball down the field, so to speak. We hit a bit of a stumble because Rwanda, the whole country, shut down and went in lockdown around the day I left the country. So we're still going to get it done this year. And when I left, I was at the airport, and my bag was over 50 pounds. And Vital, nicest guy in the world, he's family. He gave me a big hug, and he gave me a bunch of coffee. And it's called Question Everything Coffee, grown by Rwandan women. Smells great, but he gave me a ton of these things. And so I put it in my bag. My bag was like 80 pounds or something. And so I was at customs going through, and they were giving me crap because of the weight of my bag. And I said to them, but I was building a school in Rwanda. And they said, okay, go ahead. That's okay. So you can use that now. Anytime someone gives you crap, customs official, I was building a school. I'm just kidding. Yeah. And Vital's expecting another child as well. And yeah, he's great. His wife's awesome too. And I met actually his mother and his sister there. Yeah. Next up, Pearl wrote, very good analysis, Chris. Even for a non-expert on M&As, a great case study. Thank you. I appreciate the feedback. Thank you. And now you all know exactly how to analyze a deal and how to go to sec.gov and do searches for 8K press releases and go to investor relations of a company. Don't ever invest in a stock unless you go to the investor relations part of the company's website. Something I teach a lot more about in my MBA program. Yeah. Okay, next up, Manas wrote, I just had an interesting question for you. If you had an opportunity to be the CEO of a company other than HEV, what would it be? Why? And what is the most important thing for you in that company? Yeah. Wow. Probably the Red Cross. Yeah. Red Cross or United Way or any sort of charitable institution that makes the world a better place. And what I would try to do is I try to tech enable those aforementioned charities so that you can get microtransaction-based payments and donations, that sort of thing. And one thing I wish that that more websites did is if you're selling something on a website, I would love the opportunity to be able to ask my customers to pay directly to a charity like the Red Cross or whatever it is instead of myself. And I wish there was a payment engine that made it simple to do. Yeah. All right. Next up, Vishnu wrote, hey, hello, Mr. Chris. Hey, hope you're doing well. Wishing you the best with the school in Rwanda. Thank you. I appreciate that. Thank you. Then you wrote, my question is, how do investment bankers like Goldman Sachs, Morgan Stanley earn money and how much they earn? Yeah. So the way it works is, I know this because I pitched some of my portfolio companies to Goldman Sachs and they've said no. Goldman Sachs will only do a deal if the value of the company is over 500 million, right? They want to elephant hunt instead of, hunting and gathering. And so what happens is when Goldman Sachs or Morgan Stanley or investment banks work on a deal, they get a certain percent. It used to be 7% of the value of the deal, right? So if it's $100 billion, they get $7 billion. It's a hell of a lot less now, but it's a couple percent or so. They do exceptionally well. And then what happens is after the company goes public, the Goldman Sachs, their analysts will make money by having a rating on the stock and advise investors to buy or not buy the stock. And investors will trade through Goldman's trading floor. Goldman will make commissions. And then what happens is the investment bankers will cross-sell by introducing the management team of the company taken public to the private wealth management team at Goldman Sachs. So those can become clients as well. Right? So there's a lot of money there, a lot of money. So in terms of how much they make, so investment bankers make, base study, a base salary maybe of a couple $100,000. Entry-level investment bankers at Goldman were given a 30% raise this week. And most of your money actually comes in your year-end bonus. It's a meritocracy. You eat what you kill. But Goldman's pay structure, and I work there so I know how it works. You don't make as much money as you do in other banks. But it's a prestigious brand, whatever, and there's the opportunity to make partner. But you make most of your money at the end of the year in terms of year-end bonus. And your year-end bonus is not easy to calculate, and they make it elusive on purpose, which I like. What they do is you're paid based on how much money you made the firm, also based on how much money your department made. So it kind of fosters a team-based environment. And also how you mentor others, because there's 360-degree reviews at Goldman. People that work for you, they write reviews about you, confidential ones, etc. And if you take part in what's called community teamworks, or CTW, at Goldman Sachs, right, meaning you take a couple days off a year to do charity work, they like that as well. Right. So anyway, that's how it works. But you can make millions in a very, very good year. Yeah. Okay. Next up, Louise wrote here, would you mind elaborating a little bit more about the hedge fund's arbitrage strategy? Thanks. Yeah, absolutely. Sure. So what happens is when one company tries to buy another company, let me use some props here. Okay. So this is, they're lozenges I use in the morning getting ready so my voice sounds okay. Let's say, and this is just another similar product. So let's say that the Vocals owned company wants to buy Voice 37, okay? Big company, smaller company. So what happens is this company buys this company for this price. And so what happens is the stock doesn't go up to that price right away because we don't know if the government will approve the deal. And so it's at a bit of a discount. And so what happens is hedge funds will buy this in size and they'll short this in size. And they hope that eventually the spread closes, meaning this stock here goes up to the price it's supposed to when the deal is approved and closes in 6 months. So they make money based on that. They're hedged by shorting and going long, and they lever up a lot. And what that means is this. If I have an equal dollar amount shorted in this and an equal dollar amount long in this, well, I'm hedged, and because I'm hedged, I can get a loan so I can borrow more money to lever up. And some funds use leverage of 10 to 1, meaning for every dollar the firm has in assets, they invest $10, which is deadly, absolutely deadly. And so you just have to be a little bit right to make a ton of money. However, if the deal falls apart, right, and the government says no, then the stock you're acquiring goes down a lot, and you're long that stock, you're screwed, right? And this stock, sometimes it moves up or down, doesn't matter. But you can lose a ton on this. And that's why these big hedge funds, in their event-driven departments, what they do is they hire people that are lawyers or people that worked for the Department of Justice in the United States. So because they understand how the process works. Yeah. Okay. All right. Next up, ePronto wrote, thank you, Chris, for the Afterpay Square M&A deal explanation. Very timely in my M&A case. Awesome. My pleasure. My pleasure. Yeah. Okay. And Manas said, I want to ask you something about YouTube. Do you use TubeBuddy or vidIQ? Have these tools really helped you? Thanks as always. Yeah, I actually use TubeBuddy. So for those of you not familiar with TubeBuddy, and I'll show you really quickly, it's a way for you to work smarter but not harder when it comes to your YouTube content. So let me go here and show you how it works. So if I go to my YouTube channel, okay, YouTube right here. If I go to my YouTube channel here, you'll see that there's a little plugin here at the top called TubeBuddy right here, okay? And what TubeBuddy does, it lets me create documents, pardon me, it allows me to add cards pretty quickly. So let me go here to manage my videos and I'll show you an example really quickly how this works. So if I go to any video here, okay, so this one here just got published a couple minutes ago called Inflation Out of Control. And if I go here to thumbnails, I can create a thumbnail using TubeBuddy. So I can use any frame in the image, in the video to make it my thumbnail. I can also go to cards. Now, you'll notice that a lot of people have cards in the top corner, okay, of their videos. And so for me, I apply a template to my thousands of videos. Okay, and so I have tons of different templates I can apply. The same thing, I can also do a quick search and replace on cards and end screens and comments and the text in the description field. So if we go back and take a look at this video here, I'll show you how it looks. So I'll go here and I'll go get shareable link, and I'll paste it here, and I'll paste it here, and I'll hit enter. Okay, here it is here. Okay, but if I go here, you see that thing that pops up right here. This here was done with TubeBuddy. Okay, this stuff here. Okay, so it's letting people know that I'm doing this webcast now, and also you can click here to buy my stuff. Yeah. So that's how it works. And vidIQ is quite similar. They're both great. They're both great. Yeah. Yeah. They're not perfect, but they're good enough. Yeah. All right. Next up. Harsh. Hey, Harsh wrote, should people go to colleges like Harvard? Yeah. So the way I think about college in general is if you think it's going to help you fulfill your goals in life in 10 years, then do it. You know, if you think that getting a Bachelor of Arts majoring in art history is going to help you to get a job as a programmer, it won't. Then do that. If you want to, learn medicine, obviously you have to go to medical school. But I think that you can network a lot to get the job of your dreams. And what I recommend is before you go to a traditional MBA school, I recommend setting up 1,000 informational meetings. Okay, I know it sounds crazy. And ask yourself, okay, these 1,000 meetings I'm doing are free. And I teach you how to do this in my program as well. They're free to do. And let's pretend each meeting costs $100. Well, 1,000 meetings times $100 is $100,000, which is the cost of an MBA from Harvard, for example. And through those informational meetings, try your best to change careers or get the job of your dreams. And if you can't by doing all those meetings, then maybe go to business school or some other university if you want to. Yeah. But I really do believe that by the time I'm very, very old, only about 50 schools universities will still be in existence. What's going to happen is this. People are realizing, especially given COVID, you can learn from home. People are realizing that, spending 4 years at an undergraduate university for $100,000 doesn't make sense. You have 13 hours of class a week. You learn a lot of theoretical crap you can apply in the real world. It's not worth it. And so I think universities, the 4-year degrees are going to be truncated to 2 years and supplemented with online stuff. And I think a lot of universities are going to try their best to compete. And it's hard to compete if the number of students you have or the number of years students are paying is cut in half. And a lot of universities will dip into their endowments, and then they'll deplete their endowments, and then there'll be a Hail Mary pass to call all of their alumni to save the school, which it's not going to work. So I think most universities are going to go belly up. Yeah. Yeah. If the internet was invented first, would we still have traditional universities that cost a fortune? No. Okay. Next up. But I do think what's going to happen is getting into schools like Harvard and Stanford and Oxford, it's going to be harder because people are going to think to themselves, I'm not going to university unless I get into whatever, a decent school. Yeah. But there's a lot of dropouts, a lot of high school dropouts that went from the mailroom to the corner office. They're CEOs now, including the former CEO of Goldman Sachs, Sidney Weinberg. Yeah, and I've done a ton of vlogs on that, on those topics in the past. You can search for them on my website. All right, next up, Luis wrote, what do you think about these websites for following hedge fund investments? Yeah, I always recommend going directly to the source. So what you can do is, where they get their information from, they're just repackaging it and charging a premium. It's not fair. You just go to sec.gov, because any mutual fund or hedge fund that has more than $100 million in assets under management, they have to, by law, every 3 months disclose all of their holdings on sec.gov. And so everything I teach based on my students never paying a penny for anything and accessing information for free as well. Yeah. And never pay for investment advice, ever. Always do your own research. And in my MBA program, I give you a ton of arrows in your quiver or tools in your toolbox to analyze any business problem you have. Yeah. No one's smarter than you. Okay. Next up, Famukafi wrote, The Wolf of Wall Street was funded by J.H.O. Lowe. Oh, okay. I didn't realize that. Is that I'm not familiar with that firm. Yeah. I went to school with a guy named Asif Satchu, who he and he's done really well. He makes a ton of movies and he funds them and he sells them as well. I'm not too familiar with that movie or with that market though. Okay. And then follow up, another movie somebody likes here is The Man Who Defrauded the Malaysian Government. Yeah. Oh, I see what you're saying. Okay, the dude that defrauded the Malaysian government funded The Wolf of Wall Street. That's not a surprise. Yeah, I'm surprised Scorsese would get involved with something like that. All right, next up, Mike wrote, "Hey Chris, did you not like Wall Street sequel Money Never Sleeps?" I didn't like it. I didn't like it at all. Yeah, probably because I thought that number one was an epic movie, unethical but ethic nonetheless. And I just didn't really do much for me. Yeah. But it was funny how we got out of jail. And anyway, I'll talk about that another day. Yeah. Okay. Next up, Vishnu wrote here, classic liking of men and women. This question is related to the movie Jerry Maguire. Yeah. Classic liking of men and women. That movie was a great date movie. For many people, because my wife loved the romance side, and for me, I love the sports and the entrepreneurship side as well. Yeah, and the soundtrack was good too. Yeah. Next up, Samir wrote, "More cash than stock, even if it's Microsoft." Yeah. Oh yeah, especially if it's Microsoft. Yeah. I mean, Microsoft's valuation it's over $1 trillion. Yeah. All right. Next up, Samir said, "Spectacular advice in helping others." Thank you. I really do believe that when one teaches, two learn. And Manas wrote, "My mentor, I want to ask you something more, of course. Can a private company like Haroun Education Ventures become the most valuable company in the world, like in revenue-wise, without going public and selling shares?" Yeah, it's tough. For me, I'm never taking a penny. I've had a lot of my former investors and I have Arab Emirates reach out and want to fund me and stuff, but it's not about money for me. Like, what I want to do is I want to empower my students, build confidence in my students, help them take their career to the next level, and never be sponsored by anybody. Because the second you can make more money getting sponsored, and my YouTube channel is quite small, a lot of people are like, "Oh my God, you only have that many subscribers." Well, I won't take sponsorships ever, because if you take sponsorships, what happens is right away you're biased. It's kind of like when you go to video game websites to read, what the website has to say about a great new video game. And every product Microsoft makes, they say good things about, because Microsoft is one of the biggest advertisers on those websites. For example, I never want to be biased. I always want to put the student, my customer, first. Always. Even if that means I'll never make a fortune. I don't give a damn. I just want to help. Okay, but in terms of a private company becoming very valuable, it's hard. It's hard to do because when you go public, you raise a ton of money, and you can immediately use the proceeds from the money you raise, meaning primary shares. You can use the money raised in an IPO to open offices overseas, hire tons more people, generate more revenue. Private is tough. Now, there's a handful of private companies that have been family run for decades that do well, like Mars, for example. The Mars family owns it, right? They make Mars bars and M&Ms, but it's very, very tough to do. Very tough. Yeah. All right. And Pearl said that was fun. Thank you. I'm glad you enjoyed it. Thank you. Dr. Asif, how are you? Dr. A wrote, "Hey Chris, nice to be with you. Likewise. Great new background. Thank you. It's been fun. Question: if somebody buys your online MBA course, do they get all the updates, or will they only have access to the course content they paid initially? No, you'll get all updates that I put in forever. Like, I'm adding 30 hours of brand new content later this year. It's more advanced finance and accounting stuff that are electives. But every student that's purchased, I have tons of students that have purchased the MBA programs over the past 2 years. Every student that purchased them will get an email saying, "Hey, I just added new content." And if you're taking the program now, which you mentioned you are, thank you, it's going to be right after class 89 when I add a ton of more advanced portfolio management and finance stuff. But I'm going to make that, those are electives. Okay, you don't have to take them, but you'll get access to them, because not everybody wants to do very, very advanced financial analysis and big data analysis, that sort of thing. Yeah. I'm even adding a section on dashboarding. And then in the pipeline, because there's been demand for it, I'm going to add a lot more stuff on real estate. I bought a couple of buildings recently in London, Ontario, and I'm going to use those as case studies. I'm also going to add something on negotiation as well, because there's been a lot of demand for that. And so ask and you'll receive. Whatever the student wants, I'll add. Yeah, thanks. And I'll send out surveys too, asking what additional content people want to have added. Yeah, but this thing is going to be well over 1,000 hours. At some point. Again, there's only 300 hours in the core curriculum, but there's going to be a ton of electives. And if there are new social media platforms that help people's careers that haven't been invented yet, but say they'll be invented in 2 or 3 years, then I'll roll up my sleeves, do work on that, and teach that as well. I'll also have a ton more guest lectures as well, and interviews. Now, given COVID, I haven't been able to go down to the valley here where I live to meet with a lot of companies in Silicon Valley. But I can get into every single company, and at some point I'll interview the who's who, CEOs, entrepreneurs, etc., and share that knowledge with my students only. Yeah, thanks. Okay. And Stevie is magic. I wrote, you the man, Chris. Thank you. Thank you. Next up, Kazu. Hey, oh my God, dude, how are you? Nishimura-san, it's been a while, man. Hope you're doing well. Last time we talked, you were living, and Kazu graduated last year, my MBA program. Great guy, wicked smart. He's from Japan originally. He worked at a company that got acquired by Schlumberger, which is an oil driller, in Oklahoma. Really smart guy. Great to see you. Great to see you. Yeah. All right. Next up, Futik wrote, "Hey Chris, thank you very much for always being available and addressing our question." My pleasure. My pleasure. This is fun. I can't believe it's week 147 already. Yeah. Bad hair day. Okay. And then Michael wrote, "Quality, Chris." Thank you, brother. I appreciate that. Next up, Scott said, "Why did you leave Goldman Sachs?" Yeah. You only have one chance to cash in your Goldman chips. That's what they said. So I spent 5 years there. They were great to me, but I found that I wanted to make more money. I know it's a disgusting thing to say, okay, but I'm completely honest and transparent. Every Christmas bonus season, we all obviously did fine, but the cancer of Wall Street is we compare ourselves to those that make more, and I know it's crazy, and so I wanted to make more money, so I went to a hedge fund called Kingdon in New York City, and then this massive hedge fund called Citadel, which is great. They recruited me, relocated my family out to the San Francisco Bay Area, which is why I'm here. Spent some time there, was depressed. And then I thought, well, maybe it's because I want to start my own company. And so I started my own hedge fund / venture capital firm. I was happier. But I realized that the reason why, I'd worked my ass off to change careers from consulting to finance, yada, yada, whatever. And I'd be able to make the career change. I figured it out, which is why I teach about this stuff humbly. But the problem is that I would always get these new jobs and focus on how to get them without thinking first, why do I want that job? And if you chase money, it's an awful way to live. And I woke up one day and I'm like, am I clinically depressed? What is wrong with me? And I realized it's because I wasn't doing what I'm most passionate about in life. And you'll know you find your passion in life when you go to work, or work in quotes, and it doesn't feel like work. It feels like this awesome feeling like when you hold a baby for the first time, right? Not as good, because having a kid is better than working. But you'll feel lightning in a bottle. And you're like, oh my God, I can't wait to get up for work. And once you find that, once you find what you're passionate about, then go after that and ignore the whole damn world. If people want you to be, God forbid, a lawyer, your parents, whatever it is, or an engineer, and you're not passionate about that, this is your life, man. I think that if you live your life to try to please your parents, then what happens is this: when you have small kids, you have small problems, and when you have big kids, you have big problems. And so for me, with my kids, Andrew, Matthew, and Dylan, I've never told them what I want them to be, ever. And this reminds me of a great movie about that topic called 3 Idiots. They're not idiots, but there's a great movie called 3 Idiots I've talked about before that everybody has to watch. And it's the most popular Bollywood movie ever made. I laughed many times and cried a few times when I saw it. Again, it's called Three Idiots. And if you chase money, you'll lose your dreams and your money. But if you chase your dreams, as long as you're willing to fail at least a couple times, wonderful things happen. So that's my life story. That's my life story. But in terms of that comment I made on depression, I'll open up. I'm always transparent with you guys. You know, for me, if I don't do what I'm passionate about, I get depressed. And that's one of the reasons why in my office, and we're all built differently, but in my office here, I have a treadmill. And I'll get my 20,000 steps in every day on this treadmill while I'm doing my meetings or working here. Right? So it's a little bit squeaky. I gotta put some WD-40 on it. But I'm rocking 3.7 miles per hour right now. I know it looks a little bit ridiculous, but I do this all day because, as I mentioned earlier, with respect to the Jerry Maguire movie, if this is empty, this doesn't mean anything. So if you treat this well, this will work much, much better as well. Yeah. Now I'm going to put on a little bit of makeup. So whenever you're in front of cameras in movies or TV, whatever, and I've been interviewed on television, they come up to you, put this stuff in your face. But when you're working from home and you have lights and you're shiny, which I am now because I worked out a bit, what you do is you take this stuff here, okay? And then you just kind of brush it on a bit. And all this stuff does, I know it's weird for a guy doing this, but whatever. All this stuff does, actually it's not weird for a guy to do it, but all this stuff does here is it gets rid of the shine. So now I'm not shiny anymore. Yeah. So anyway, that's what I use. If you want to know what product this is, it's called Stay Matte, M-A-T-T-E. And then my wife got me this for my birthday from Sephora. Yeah. All right. All right, next up, Kazu wrote, what is the best way to contact you as an alumni? Yeah. Well, you have my we're connected on LinkedIn, I think. Yeah. So you can message me there. I'd love to hear from you as well. Love to hear from you. Yeah. And then also for and Kazu is in the platinum program. But we also have so that all of my students can network with each other. When you take the program, the MBA program, you go to my website to learn more, harounventures.com. But when you take it, at the end of the first section, you'll see a link for how to network with other students. And there's a link to a Slack account that my students get forever to network with each other. Yeah. Once you buy the program, you never have to pay another penny for anything. Oh, Kazu, by the way, I don't know if you got my email, but I sent this out to all platinum and gold students from this year and last year. I'm holding graduation December 18th. At 10 a.m. here in San Francisco. And I sent you an email on that as well. You're on the list. Yeah, thanks. All right, next up, Zach. Zach, how are you, man? It's been a while. Hope you're doing well, brother. Zach wrote, hey, Chris, a follow-up question about last week investing in USA stocks. I've called the top 5 banks in my country in Somalia, and none of the banks offer such services. Wondering if you have any other ideas. Okay, I got you. Okay, yeah. Okay, let me think about this. Somalia. Okay, let's do this together. Let's figure this out right now together. This will be fun. All right, let's go here to Somalia, how to buy stocks. I know it's simple. All right. Let's see here. So there is a stock exchange in Somalia. So what I would do is I would call up the Somali Stock Exchange. Okay, just go to contact us right here and ask them. Okay, here's the phone number right here. Okay, and ask them what banks, people that invest in the Somali Stock Exchange, what banks do they use? Okay, meaning to buy shares. And while you talk to somebody here at the Somali Exchange, ask them, how can I, as somebody living in Somalia, invest in U.S. stocks? And they'll tell you as well. They'll tell you, yeah. And if that doesn't work, please let me know. Okay. Next up, Yash wrote, hey, Chris, I hope you remember me. I do. You were the one, I think, that recommended I watch 3 Idiots. You recommended it several times. And finally, I did it. And Kevin, one of my MBA students, recommended it as well, which is a life-changing movie. I do remember you. Thank you. And you wrote, I just want to extend my gratitude on behalf of everyone for enlightening us the way we're supposed to be. Thank you. God bless you. I appreciate that. Thank you, Ash. Thank you. Next up, I've got Easy Geek Tube. First time I've seen you on the call. Welcome. I hope you join us again. So Easy is saying, hey, Chris, can you talk about companies that do a reversed split? Give me 1 second, guys. Sorry. Sometimes when I do this, it jumps on me when I get a lot of questions at the same time. I found now. Okay, reverse. Here we go. Good. Can you talk about companies that do a reverse split when it goes on another exchange and why it always has a negative effect? For example, Dragonfly, a Canadian drone critical solutions company. Yeah. So what happens is we know that a traditional stock split means that the number of shares increases 100% and the stock price gets cut in half. For example, let's say I invest in a company that's $100 and there's 1,000 shares. So the value of the company is $100 on 1,000 shares. That's $100,000. And the company wants more people to buy the stock, and they think a lot of people can't afford $100 to buy a share. So the company does a stock split. So the company, what they do is they cut the stock in half to $50 a share, and they double the number of shares. So $50 times 2,000 shares is also $100,000. But at $50, more people can afford to buy one share. Now, when it comes to a reverse split, it's a little bit different. A lot of times, the reason a company does a reverse split is because their stock is so low, it's like a penny stock or something, that people aren't going to take them seriously, investors. And also, certain stock exchanges want your stock to be valued at least $4 or they'll delist you. So you do a reverse split, okay, which is the exact inverse of what I just explained. But when you do a reverse split, sometimes it could signal that, oh my gosh, the company is in trouble as well. Ooh, they're about to get delisted. So it sends out a negative signal to the marketplace. Yeah. And I can't believe that drones are legal, dude. Like, I have one. I've got, if you're going to buy a drone, it's not what company, or it's not what kind of drone to buy. It's what DJI drone to buy. I have a DJI drone, great Chinese company. But I can't believe it's still legal. I really can't. And I have very good friends that are the largest owners in some of the largest sports teams you've ever heard of. And what they do is they have massive drones hidden, and they publicly disclose this too. Massive drones, especially the ones by the bay and by the ocean. They have massive drones that are on top of the stadium. They're hidden. And if somebody has a drone that comes into the stadium, which it's like that movie, The Sum of All Fears, Tom Clancy's terrifying. This massive drone they have with like 5 propellers on it will come out, throw a web, like spider web, around the other drone, and then boom, quickly take it out to the middle of the ocean. So it can detonate or whatever. I just can't believe drones are still legal. Yeah. And in fact, when I went to the Czech Republic in 2018 to record a bunch of trailers for my videos, we went in this beautiful bridge, and the drone was supposed to come up to me, and I was going to say, even the sky's not the limit if you take this course. And the drone was supposed to fly in the air. It stopped working. And the reason it stopped working, right, it doesn't fall out of the sky, it just stays there, is because a lot of drones, the way it works is governments won't let them fly there unless the government can kind of control where the drone can go. So, and you could probably hack this, whatever, I wouldn't do it, but in the software algorithm and the mapping software that drones use, they cannot go close to government buildings. Yeah. All right, Demian, how are you? Demian is from Barcelona. That's right. He's in my MBA program. Good to see you, brother. So Demian said, "I hope you're well. Thank you for this week's call. A huge option to learn from the best. Thank you. God bless you. And I hope you and your family are doing great. And your last name is Valenzuela. And I always teach you about this. You got to do it though. You got to buy Fernando Valenzuela jersey. He played for the Dodgers years ago. And give it to your kids as well." All right, next up, Fudik wrote, "Hey Chris, quick question regarding portfolio exposure. If it's a normal stock, I can multiply beta in order to get beta adjusted exposure. How about option exposure? How do you get the correct adjusted exposure?" That's a great question. For those of you not familiar with beta, You can find out how volatile a stock is by multiplying the stock times its beta. And the way it works, and I'll give you an example using real stocks in a second. The way it works is you always assume the index, like the S&P, has a beta of 1. And if you buy a stock that's got a beta of 2, that means it's going to go up twice as much as the S&P and down more as well in the S&P. So if the market's doing great and you own high beta stocks, awesome, you'll do great. If the market's doing crappy and you own high beta stocks, you're going to lose a lot of money. Low beta stocks are ones that don't go up and down as much as the index. So if the beta is less than 1, usually on a 6-month trailing basis, the historical data implies the stock doesn't move as much as the market does. And you want to own low beta stocks when the market is not doing well, right? So usually a lot of stocks Warren Buffett buys are low beta. Okay, so let's go and look at an example very, very quickly in my favorite free resource, which you all know is Yahoo Finance. Okay, so let's go here to Yahoo Finance, and I'll type in any random ticker without looking. Whoops. Numbers aren't tickers. All right, I'll do it again. Okay, FFU. What's FF? Okay, Future Fuel Corp, F5. Oh, this is level 7 company. I invested in them years ago. Yeah. All right, so let's go here, and let's go to beta. Here we go. All right, so the previous 5 months, usually it's 6 months, the beta of this company is 1.05. And that means that it moves 5% more than the S&P does. It's got a slightly higher beta. Yeah. And people use this to calculate their beta exposure as well. If you only own high beta stocks and the market crashes, you're going to lose a ton of money, and vice versa. Yeah. All right, now let me go back here and discuss this in more detail. And what we used to do is we used to take the raw unadjusted beta from Bloomberg years ago, and we'd change it using our own variables. And if you're interested in that, there's a company called Barra, B-A-R-R-A, and you can actually license independent variables to monitor your portfolio with that stuff. Yeah. Okay. In terms of option exposure for beta, it's more tricky, dude. It's much more tricky. And what I'm doing right now in my complete options course is I'm teaching you how to manage volatility and how to think about hedging every stock you have in your portfolio using options. The difference with options, though, is that you've got time value decay, right, which is theta, right? And I'm going to nerd out really, really fast here, guys, okay? Sorry about this, but I got to go there. I want to show you the options course really quickly, just the spreadsheet I'm using. Let me shut down PowerPoint here. And if anybody on this webcast is interested in beta testing what I'm about to show you before my option course comes out, let me know. But make sure you have, please, options research or options experience first. Okay, so if you have any experience trading on options ever, then send me an email at support@harounventures.com, please. Okay, and then what you can do, and let me just delete this here, is I can send this to you. Okay, so what I'm doing here, and this is all beta, it's not perfected yet, is I'm teaching you all how to value options using Black-Scholes, as well as using the binomial pricing theorem and Monte Carlo simulation as well. Okay, and it's pretty cool because the way I set it up, and let me go over here to binomial. Apparently I've done that tab there. Yeah. And I set it up so that there's a genius track and a beginner track as well, and I track everything here for you. You can also hide these things here to get yourself a little bit more real estate. It's not perfected yet with these images, but you guys get the idea. But I'll show you how this works really quickly. If anybody has questions about how to do this in Excel, let me know. What I'm about to show you uses absolutely no macros. I do not believe in using macros in Excel because code means if you run code on your machine, you can get a virus, etc. So the first thing we'll do is we'll select a stock. So let's select a US stock, okay? And down here, and I can tell you how I coded all this if you want to. I'm going to pick a random stock, okay? AMT, okay? AMT. And this is a tower company, okay? It's a good real estate play as well. You can click here to get access, if you want, to the SEC Gov stuff for AMT. And I've got thousands of stocks here as well, and international stocks too. Then you enter in the dates, and then you this is kind of a little bit long here, but what you do is then you download the data. Okay, so right here is all the data for AMT historical. I pull everything off of Yahoo Finance. We copy everything here. I'll do this quick, I promise you. And then what we do is we paste it in here. Okay, so here we go. So I just pasted all this data here for AMT. And the reason I'm doing that is because I want to be able to come up with the historical volatility, right? And so from a risk management perspective with options, volatility is incredibly important. And so here we can select, what is it a put or a call? We enter in our strike price if we want to, all that stuff. I provide you with a ton of charts down here, and I explain all the math as well. So to value the call, anyway, that's it. So here's the option profit chart I make for you. Yeah. But if you're interested in this, and if you have option experience, let me know. I'll send it to you. I also do it with Black-Scholes and over here with Monte Carlo, which I'm still kind of working on right now, architecting. This course will be out later this year. Email support@harounventures.com if you're interested in beta testing this. And I'd really appreciate any feedback you guys can get in terms of trying to break the spreadsheet and all that good stuff as well. But I have a portfolio management tab I'm still working on that will take all the stocks you own, and then you have to look at all those stocks, and I teach you how to create an option strategy to hedge out your exposure to that stock completely. Okay, and so last thing I'll show you here, there's 3 parts to the course. There's intro to options, and then I've got here pricing and analysis of options. And then over here, I've got option strategies. And so right here, I teach you how to use leaps, married or protected puts, and tons of other strategies to hedge out any type of position you can have as well whenever you're exposed to options based on any country or country ETFs even. So this here is international, right? So these are all the ADRs. Okay, so for example, this here is Anpac Biomedical based in China, which has options. Yeah, so. Yeah, if anybody has questions about options, happy to answer them here. Or just email support@harounventures.com and request this spreadsheet. And I'll send you a more prettied up version so I can get feedback. And thank you as always. Okay. All right. Next up, Hui wrote, "Hey Chris, how are you doing? I'm always great, thanks. I hope you're doing well. I hope you're having a wonderful day. Likewise, thank you. My question is, what are some techniques startups use to initially draw attention to their product?" Yeah. So sometimes startups are really controversial with their marketing, and as a result, they get free media attention for it. Okay, and you have to be tasteful as well. And so what Mark Benioff did with Salesforce.com, and Salesforce is the largest employer here in the San Francisco Bay Area. I know Mark. I met him before. Great guy. I've invested in his companies. In Salesforce.com. But what Mark Benioff did was when he launched his company, he had the logo was software with the line through. I'll show you. Early Salesforce logo. Yeah, here it is here. Okay. So right here, it's kind of the quality's not that great here, but you can see here, you see this? It was very controversial what he was doing. He was basically telling everybody, hey man, software is dead. Don't buy software. And nobody got it. And it was because he's saying buy cloud software instead. So it was very controversial, and it worked exceptionally well. And there's a lot of companies, startups will do controversial advertising as well early on. So you want to be controversial but tasteful and not offensive. And if you are that way, and if you use the methodologies I teach in my MBA degree program to network with people, you will be able to get meetings with a lot of people in the media that will be more than happy to write about your company. And once you get a couple articles written about your company, which I teach in my program, then what you do is you strike while the iron's hot and you go to investors and you show them the data that, hey, the number of subscribers to my product spiked a couple times because of media articles, whatever. Yeah, hopefully that's helpful. All right. Morning, Jasper. Jasper, how are you? Jasper is in my MBA program as well. He's a very big fan of KISS. He's based in Europe. Yep. Okay. Next up, Hui wrote, what are some financial tips that everybody should know? Yeah. So I would say before you invest in any stock, do a thorough investment write-up. And I teach you this in my MBA program. I have a ton of tools in the program to help you do this sort of thing. And I want you to do that so that after you buy the stock, say a couple of years down the road, if the stock is crashing, instead of selling at the worst time, you'll go back and read your research report that you wrote 2 years earlier. And you'll think to yourself, okay, 2 years ago when I wrote this thing, had I known about the reason why the stock is crashing today, would I still have bought it? If the answer is no, then sell it. If the answer is yes, then buy more. Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Right, you got to be highly unemotional about business and the markets in general, and be a contrarian as well. If you buy the same stock everyone else loves, there's not that many incremental investors push it higher. That's one thing. Always do your own research. Number two, be mindful of liquidity. Make sure that a stock trades every day at least 10 times more than your position in the stock. And I'll show you an example. And I say this because illiquid stocks own you in a down market rather than vice versa. Meaning if a stock doesn't trade very much and you own a lot of it and you're trying to get out, you're going to drag that thing down big time. And that's why a lot of hedge funds went belly up in 2008 because of liquidity. So what I'll do is I'll show you liquidity really quickly here. So if we go over here and I'll go to Yahoo Finance, as I always do, because it's free and it's accessible everywhere. And we type in a ticker for anything. What do I choose there? Okay, here's an ETF. So this is an ETF for the S&P, the growth stocks in the S&P. So what we always do is we look at the average volume, okay? So we take the average volume times the stock price. So the stock price is $105. The average volume is 360,000. So that means that this stock trades about $4 million worth every day, right? And so that's certainly, way more than 10 times the amount I would buy of this stock. So I'm fine from a liquidity perspective. Yeah. All right. And if you have more questions about finance or in general, I'm happy to go through it. I know you wanted more examples. In my MBA program, I have a 100-step Excel template I created for you to analyze any company, which includes those two aforementioned things I just talked about and much, much more. Yeah. Okay. And Hui is saying, do you have the exact date on when your options course will be released on Udemy? It's going to be this year. I don't know the exact date yet. I'm still trying to nail down with Adad, who's the guy that did all my trailers in the Czech Republic. I'm supposed to fly down to Los Angeles to do a video shoot for that course. And also we're renting an airplane just on a set in LA to do another video shoot for my MBA program. And what I'm doing is, for my MBA program in the commercial, what I'm doing is I'm a pilot. It's kind of cheesy but fun. I'm a pilot on an airplane we rented. And I come out of the cockpit and I walk into regular class. And I tell everybody, you've just been upgraded to business class, woohoo! And everybody walks up to sit in business class. The problem is, because of Delta variant, we can't nail down an exact time to be able to rent that facility. Yeah. So we almost got it a couple days ago, and then Delta, we just don't know what's happening. Yeah. Regardless of when I shoot the trailers, it's coming out this year on Udemy. Thank you. And I'll have a much more elaborate, longer version in my MBA degree program because there's no limitations on hours, etc. Yeah. All right, next up, Demian wrote, my question is, can you talk about blockchain technology and the possibility of business models, how the algorithms work in this technology? Many thanks. A big hug from the city of Messi. Excellent. Thank you. Oh, cool. You're not in Barcelona. You're in Messi. Oh, where Messi plays football, the real football. Gotcha. Okay, great. Cool. Okay, so the best way to think about blockchain is it's a platform. Okay. And it's a different platform based on which crypto it is. So when you look at Bitcoin, the way to think about the word blockchain with Bitcoin is, do you remember those old books, finance books years ago, where people would write in debits and credits based on what they bought? That's what blockchain is for Bitcoin, okay? It's a digital ledger. What blockchain is for other cryptos is much, much more, usually. And the reason why there's so many cryptos out there is because there are limitations with Bitcoin and the older cryptos. And so new ones are being created. Also, there's a lot of money at stake. Most cryptos are an absolute scam. Be careful, please. But if you look at the blockchain for Ethereum, okay, which is a crypto I'm currently mining, I'll show you in a second. But if you look at the blockchain for Ethereum, the blockchain's a platform. And yes, it's a digital ledger, but also it's so much more. It's a platform for ICOs. So a lot of companies or a lot of cryptos that go public or do initial coin offerings, ICOs, they actually do it on the Ethereum platform. And on the Ethereum platform, what you can also do is anything that requires secure contracts. So think about DocuSign. It's kind of like that. You can have secure contracts for any industry. You can also sell NFTs. So most NFTs are actually done on the Ethereum platform, non-fungible tokens. Yeah. I just updated my cryptocurrency course on Udemy. So for those of you that have bought it, it's up to date now. If you want to, I'm so sorry, ignore that. I clicked the wrong button there. Okay, that was the wrong button. That's 5 seconds of your life you'll never get back. Sorry. But if you go to my website here, and then you go to /crypto, all lowercase, what you see here is my mining computer. Okay, so I'm currently mining. It's up in Dylan's room now, my son. How are we doing on this thing here? So we're currently mining Ethereum, or Ether, which is on the Ethereum platform. Okay. And what happens is once this line fills all the way up, it goes directly to my Coinbase account using this address here. That's my Ether account on Coinbase. So we're at $383. So we're at 69% of the way through. Once we get to 0.2 of an Ether, I automatically get that deposited. Yeah, so it's fun. It's fun. But I do think most cryptos are a scam. Yeah, just be careful. Always do your own research. Don't rely on me or anybody, please. Yeah. Yeah, especially on YouTube, dude. I gotta tell you, man. Most of the comments I get on my YouTube channel, whenever I talk about cryptos, it's somebody trying to scam somebody else. And if I caught somebody, I found somebody's address and everything and tried to scam me. And if you want, just go to my vlog and do a YouTube vlog, whatever, my website, and do a search on cryptocurrency scammer, and I'll show you how I uncovered him and what I did with him. Yeah, I did turn the other cheek. All right, next up, Lionel said, thanks, you're most welcome. Samir said, Chris, great presentation. Thank you, I appreciate that. Thank you. I've taken your courses and I've been working on my portfolio. I'm ready for my first investment, but given the current bull market, I'm tempted to wait until prices drop. I'd love your thoughts. Yeah, I like your approach. I do. You know, if everybody is buying stocks, then you got to be patient. You got to be contrarian and unemotional as well. And so the best telltale, the best time to buy stocks, and what I'm going to show you works 100% of the time. Okay, I put my reputation on the line with this. Okay, I've used this a lot. It's helped me make money in the past. Look at me buying time and trying to find my keyboard. All right. So what we do is you go here to finance.yahoo.com. And what you're going to do is you're going to monitor the ticker for the VIX. Okay, now the VIX measures volatility. It's based on the Chicago Board of Exchange. All it does is the VIX measures how much volatility the market is expecting for the S&P 500 stocks. Okay, and the more volatile, the more scary it is, the more fear is in the index. And let me show you exactly how to read this. Okay. So right here, still loading. Actually, I'm going to go back to small. Give me 1 sec. Right here, every chart kind of tells a story. Okay, I'll leave it like this here. Okay, so the VIX was VIX ticker was actually launched by the CBOE around 1990. Okay, and it spiked here because of Gulf War I. There's concerns. It spiked here because of the Asian financial crisis in 1998. It spiked eventually after 9/11, 2008 financial crisis as well here. And then in March of last year, and this is tough to see, you won't be able to see it from this data here, but intraday, the VIX spiked to over 80, okay, in March of last year. And that's when you buy stocks. Okay, and it's easier said than done because it's going to feel like the world is ending, dude, when the VIX spikes to an all-time high next time. But when you invest, things are never as bad as you think, and things are also never as good as you think. And so the bottom line is, when the VIX spikes to a massively high number, no matter what happens, no matter what, you have to buy stocks. You got to back up the truck and buy stocks. Okay, and your friends and family are going to think you're crazy because nobody else is buying. They're going to say the world is ending. You can't do this. That's when you buy. And Elon Musk is very unemotional, which is one of the many reasons why he's successful. Elon Musk backed up the truck and bought a ton of Tesla stock last February and March. And he's made a fortune off of that alone. And Warren Buffett is also incredibly unemotional. And so here's a pattern. A lot of billionaires are very unemotional. You know, I've worked for some billionaires, I'll never mention who they are, who I think I know for sure one of them has Asperger's syndrome. So he's very unemotional, and he does incredibly well because he's unemotional about investing. You got to be that way. So the bottom line is, when the VIX spikes a lot, no matter what, back up the truck. Yeah. And my favorite investments are buying broken stocks, but not broken companies. So if a stock is getting murdered and is down a lot because the whole market's down, that's when I buy. It feels uncomfortable too. It feels like death when you're buying it. But it has to feel that way because you got to put yourself in the mind of every other investor in the world and don't think like them. Yeah. All right. Next up, who you wrote, what are some mind-blowing facts about Wall Street? From a quantitative perspective, it's tough for me to really articulate this, but what I will say is there's a hell of a lot of depression on Wall Street because people are very judgmental, and people always compare themselves with others. And there's always somebody that makes more money than you. And I worked at a very large hedge fund. And there was like 20 of us in the office. I've never opened up about this. I'm not going to say which hedge fund. And there was this girl in the office, and you know, it was a really stressful place to work, dude. And we came in one day, and she was no longer there. She took her own life. It was tragic. But there's a lot of depression in Wall Street. You think money buys you happiness? It doesn't. Money is the root of all evil. And for a lot of billionaire hedge fund owners, a lot of them are ethical and they work hard. I get it. But many of them cut corners and break the law. And what they do is they set up this moat so that they get their analysts or people who work for them to do the dirty work of doing insider information, and they're protected. Yeah. And they will slaughter them or waste them or get rid of them if there's any sort of ethical issue. Or heat from government officials. But sometimes you'll see a lot of these billionaire investors, and you'll read they just got arrested for something. You're like, I don't get it. Dude, you're already worth billions. Why would you do that? It's because once a cheater, always a cheater. They've been corrupt their whole lives. You know, they've used people their whole lives. They've broken the law their whole lives in order to make money. And finally they got caught. Once a cheater, always a cheater. Yeah. It's kind of like you never trust someone in business that cheats on their spouse, because they'll cheat on you as well. Yeah. Okay. Yeah. And it was if you guys haven't read the book by the Dalai Lama called The Art of Happiness, please read it, or do the Audible version of it, The Art of Happiness. In the book, the Dalai Lama says that the problem with Western society is we sacrifice our health, our entire lives in order to make money. And then at the end of our lives, we sacrifice all of our money in order to maintain our health. And then we look back and we realize we never really lived to begin with. It kind of puts things into perspective. Yeah. And look, I get it. We all need money to survive. But if you make money your God, you'll never be happy because you can't serve two masters. All right, next up, Jasper, who's in my MBA program. Big fan of Kiss, the band, Gene Simmons. And for those of you, you know the band Kiss. It's Kiss. Well, Gene Simmons is Israeli, and the S is actually not an S. It's a lamed. It's Hebrew for the letter L. So KISS is actually kill, which is kind of a cool name. Yeah. I want to rock and roll all night and party every day. Right, that's what they said. So Jasper, who loves KISS, wrote, "Hey Chris, do you have any tips, ideas, etc., on how to become a chief information officer? What degrees, software application, etc., do you think I should look into?" Yeah. So it takes time. Usually it's more of a senior position, and usually you have experience either as a programmer or a network architect, meaning deploying, say, Cisco routers in a company and configuring them, that sort of thing. And you have to kind of be a little bit more of a strategist, kind of like you wear a McKinsey strategy hat and Accenture technology hat at the same time. It takes time. But with anything in business, it comes down to networking as well. So who appoints the CIO? Well, quite often it can be the CTO. Okay. The CIO is a strategy person in tech. The CTO does the tech. It can also be the CEO and the board, and maybe even the CFO. And so you got to network with all those aforementioned people in your company, prove to them your worth. And then after time, hopefully after you ask a number of times for a promotion, you have to ask or you'll never get, it works out for you. Along the way, make sure to set up a ton of informational interviews like we talked about in semester 1 of our program this year in the personal growth track. Network like crazy because your network is your net worth. And relationships are always more important than product knowledge. Now, good to see you, brother. All right. And if you want to learn general tech stuff, you can always take online courses. I recommend taking, there's a teacher named Angela Yu. Check out her courses if you want to. Yeah. All right. Next up, Manas said, who's your favorite comedian? My vote goes to Fluffy. What about you? Yeah. Okay, Dave Chappelle. Dave Chappelle. One of my investors in my venture firm years ago, actually not years ago, I think it was 2015 or so, he took me to see Dave Chappelle at the Google Amphitheater here, and I've never laughed that hard in my life, right? Some of the stuff's a little bit too extreme, but his delivery is amazing. And as Maya Angelou said, people might not remember what you said, but they'll never forget the way you made them feel. And Dave Chappelle made me feel great. I was my stomach hurt the next day. And I watched years ago in the early 2000s the Chappelle Show as well. You can watch them online if you want to, the replays, or watch his stand-up comedy, or watch him when he hosted Saturday Night Live twice, once in 2016 and then another time earlier this year. He is an absolutely brilliant, gifted comedian. His delivery is key, though. Yeah, he's wicked smart. All right, next up, Harsh wrote, how do you write emails that get a reply? Yeah, so I don't like emails. I think email is dead. Email died decades ago. Most emails we get, we never even open. So I wouldn't do that. What I would do is use LinkedIn and send in-mails, because I know for a fact you and everybody, whatever on this call, we've all opened every in-mail we've received over LinkedIn, but we certainly haven't opened every email we've received. And for more details on how to do this, just check out my MBA degree program, as I teach a lot of this stuff in the first semester on networking. All right, next up, Manas wrote, have you tried Windows 11? I heard that the Windows logo is now centered on the button. I've not. You wrote, please don't use it unless it's the last option. I used it, and now say I'm going back to 10. I don't know why I got Windows 11. It's basically useless now. Yeah. Never, ever, ever. And I've made mistakes. Look, I used to be a beta tester for Microsoft back in the 90s. I subscribed and personally paid for MSDN, Microsoft Developers Network, $2,000 a year to get all their beta products first. I was a techie. I loved it. And I know that if you buy the new version of any operating system, whether it's Apple or Microsoft or Linux flavor, Red Hat, whatever it is, it's going to cause you problems. You always wait. Always wait. Even Apple, it's like the best company in the world. They make so many mistakes with their new upgrades. It's a joke. Don't ever turn off auto upgrade always, and always be a year behind everybody else in terms of upgrades to new operating systems. Microsoft's the worst though. I remember when Windows Vista came out. It was a disaster, an absolute disaster. Steve Ballmer was running that company into the ground. The reason why he's not there anymore as CEO. Always wait until a year after it's released. Yeah. But what Microsoft's trying to do from a strategy perspective, and I like Satya Nadella a lot. I think he was a brilliant choice to be CEO. He's the guy that created the cloud division at Microsoft Azure. What they're trying to do is they're trying to keep Windows relevant longer term by making it kind of a cloud-based offering, right? And it's going to take time for them. You can't just take an antiquated, bloated client-server software package called Windows and throw it up in the cloud and expect it to work right away. It'll take time. It'll take time. But I think the architecture is smart longer term for what they're thinking. And the same thing with Xbox. I mean, Microsoft, I think the proprietary games in the Xbox suck compared to the PlayStation. But I do believe that the big advantage that Microsoft has in the long run with Xbox is that Xbox can be kind of like a cloud-based service. You know, it can run, you can play Xbox games on an Xbox, of course, Windows as well, and now televisions is next. And so whenever we buy a Samsung television or any TV, there's the Netflix app in it and a bunch of other apps. Well, what's coming soon is the Xbox app, right? Won't be easy to deploy, but eventually you'll be able to play cloud-based games hosted elsewhere if you have high bandwidth, whatever. And the same thing will happen for Windows. I think that at some point when we buy televisions, there's going to be a Windows app as well. And the reason that Microsoft got into the video game market back in 2001 with Xbox was because they were terrified of Sony. Microsoft was terrified. You know, they saw the PlayStation and they thought, oh my God, the PlayStation is like your computer and your television is like your computer monitor. We got to get into this market just in case. So it's fascinating. It's fascinating, yeah. But I'm a big fan of Satya Nadella. I think he's money. All right, next up, Futik wrote here, last question. If I ask as many as you want, please. If I have to do 60-40 long short, and what that means, if for those who are not familiar with it, is when you buy a stock, you're going long, right? You're going long the stock. The opposite of buying a stock is a short, meaning you're betting against it. If you have $100 and you take $60 to buy stocks, meaning long, and you take $40 to go short, that means that your long-short ratio is 60-40 per Futik's question. So if we have to do 60-40 long-short, and that's kind of market neutral-ish, yeah, 20% net long exposure. Now, I used to manage money, a lot of money, humbly, at 10 to 15% net long exposure. Yeah, it's called market neutral. So if you have to run market neutral, let's say the market trends up a lot and long exposure is too high, that means you'll have to keep selling winning positions. Now, so what you're trying to do when you're 20% net long, okay, which is basically market neutral, and the way you calculate that is you take $60 that you have invested on the long side, $20 short, okay? So 60 minus 40 is $20. When you're 20% net long the market, which is kind of market neutral, what you have to do is you have to, number one, preserve capital. Number two, generate a positive return. Number three, try to outperform the benchmark if you can. It's almost impossible to outperform the S&P every year if you're running market neutral. So how do some hedge funds do it? Well, if you have $100 to invest, and as you mentioned, you're 20% net long, meaning $60 long, $40 short. If you have $100 to invest and you're 20% net long, the banks, meaning the prime brokerage firms, the investment banks that are kind of like your bankers in the hedge fund industry, what they do is they let you use leverage, okay? Because you're kind of hedged. And in the fall of 2008, a lot of firms, and there's one I worked for years ago, okay, which managed billions. For every $1 in capital they had in assets, they had $10 invested. So in the fall of 2008, a lot of companies almost went belly up doing what I'm about to tell you to do. But if you're 20% net long and you have $100, okay, meaning you're $60 long, $40 short, and if you lever up 10 times, so you now have $600 long, $400 short, then all you have to do is be a little bit right every now and then to make a ton of money. The problem is, though, unwinding those trades if the market turns, right? And so really intelligent investors or hedge funds, whatever, they tend to do well by, going long the great stocks and shorting the crap stocks. But every now and then, there's 1 month in a year or a decade where all those trades reverse, okay? And it's devastating. For example, in August of 2007, what happened was all the crap stocks went up and all the good stocks went down, because and quant funds like the Goldman Sachs Alpha Fund and Renaissance, got their asses handed to them that a month, right? So it happens every now and then that those crowded trades stop working, and it's devastating. It's devastating. Yeah, that's why I'm not a believer in using leverage and some derivative products. And Warren Buffett once said that derivative products are financial weapons of mass destruction. So I just be careful, especially with leverage as well. I wouldn't use any leverage. Yeah. And I wouldn't short stocks. I just buy puts. And I'll explain this in my option scores coming up. But when you buy a put, the most you can lose is the amount of money you paid for the put. When you short a stock, you can lose an infinite amount of money if the stock goes up a lot. Yeah. All right. Next up, question from V, who wrote, "Hey Chris, how long does it take to complete your MBA program start to finish for normal?" Yeah. You can do it as fast as you want. You can do it in 2 months if you're full-time focused on that, or you can do it in a year, right? So it's 300 hours, and you don't have to watch every lesson, right? There's 100 quizzes after all 100 classes. So 100 classes times 3 hours each on average, that's 300 hours. 100 quizzes, one after each class. The quiz will take you a couple minutes max to do. It's easy, that's it. In order to pass, you just have to get over 50% on half the quizzes. So you don't even have to take the whole program. I architected it like I'm a waiter at a restaurant. You know, a waiter will tell you all about the menu. You only choose a couple entrees or one entree, a couple appetizers, right? And the souffle takes 20 minutes to get ready. You got to order early. But that's the way I teach. So you don't have to take everything, just the stuff that's interesting to help you take your career to the next level. And so if you think about it, if you do all 300 hours, that's less than 1 hour per day. And you get access to it forever. So you can take a decade to do it if you want to. Completely up to you. Yeah. Or you can binge watch it in a month and get your money back, because you get 100% of your money back within 30 days. Yeah. No questions asked. I always give you money back. Okay. All right. Next up, Hui wrote, besides Shark Tank, what are some other must-watch business shows for entrepreneurs? Yeah. It's tough. A lot of people talk about The Prophet, which is a nice play on words, euphemism, profit, like prophetic and profit for money. I haven't checked that one out yet. You might want to look at that if you want to, but there's really not much else I can really think of. There's this show on HBO about investment banking in England I watched. I binge watched it. I can't remember the name. It's not that helpful though. I can't really think of others, but just do a search on TV shows similar to Shark Tank. I'm sure you'll find a bunch. Yeah. All right. Next up, Jasper wrote, answer for V. Oh, you're talking to V. Oh, answer for V. I'm a current MBA student, Chris. It takes me 6 to 10 hours a week for 52 weeks to complete all the lessons. Yeah. That's right. That's about less than 1 hour per day. Yeah. So 300 hours, if you're going to do all 300 hours, which you don't have to. So if you take 300 hours divided by 365 days, it's less than an hour per day. Yeah. Cool. Next up, Victor wrote, "Hey, Chris, is there a way on how to monitor the future M&A deals? Everyone has access to information through websites, but not the information about the webcast on the website." Yeah. So when the webcast goes up on the website, you and I have immediate access to it, just like the hedge funds. Okay. It wasn't always like this. And then in 2002, a senator from New York named Eliot Spitzer created something called Regulation FD, which means fair disclosure, which means that you and I have the exact same information, exact same time as every other investor on the planet. And so what you can do if you want to is a lot of websites, a lot of companies, if you go to their investor relation portion of their website, what you can do is you can sign up for their email distribution list, and you'll find out about webcasts immediately as well. Yeah. All right. Next up, Desu wrote, "Chris, hope you're well, likewise. I just want to congratulate you for such a great initiative of building schools with Project Magoo. Thank you. God bless you. And you're always benefited from your lessons. Thanks." Thank you. I appreciate all the credit goes to Vital. Yeah, thanks. Next up, we got Gregory. Gregory, I was thinking of you before, man, because when I was making, and Gregory's from Europe, when I was making the slides for the 10 shows to watch, the business shows and movies, one of them was Succession. And there's one dude named Gregory who's in that show who's hysterical. He's actually British, but he does this goofy American accent. But he's a funny guy. Yeah. So Gregory wrote, "Chris, I really enjoyed the MBA class. Thank you. I appreciate it. How does a retail investor know that an 8K is being released, such as in the case of Square?" Yeah. So you have to go to sec.gov, okay? And just check it out there. And you can even keep hitting refresh, after the market closes if you think a big press release coming up. What you also want to do is go to the investor relations portion of their website. In addition, if the company allows you to do so, you can sign up for email alerts, and they'll email you immediately. Or better yet, you can do a search on Google Alerts, okay, which is what I used to do when I was a hedge fund manager. And so Google Alerts, you can get emailed the second any news release comes out. Right? So you can do Google Alerts for anything. So if you're ever interviewing with a company, set up Google Alerts. So let's say you're in the elevator, you're about to interview at that company. You can get an alert from Google on news that just hit the tape. We're just press release that just hit on that company, for example. Yeah. All right, next up, Yashovardan wrote, "Sir, you're awesome. Thank you. God bless you. Thanks for spreading your knowledge and being available to us. Grateful to have a teacher like you." And then you said high five. Thank you. High five back at you. My students inspire me so much, and I love doing what I'm doing. And thank you for all being here as well. I don't have a job. I have a passion. Yeah, and it's fun playing grown up too in these clothes. Yeah, can't get the hair right though, but yeah. All right. Next up, Harsh wrote, "Hey Chris, what are your thoughts about the new ERP Workday?" Yeah. So for those of you not familiar with ERP, it stands for Enterprise Resource Planning. It's kind of like Microsoft Office for the whole company. So Microsoft Office is Word, Excel, PowerPoint. An ERP is like Microsoft Office for the whole company, except there's a software package for each department. Financials, human resources, accounting, manufacturing, logistics, HR. And so there's a company named Workday, ticker WDAY, founded by David Duffield and Anil Busri. I know because I invested in the IPO years ago and I met them. And Workday does what I just mentioned, but mainly for human resources. Okay, mainly for human resources, and it's all cloud-based as well. So it's a great company. I have a graduate from my MBA program that works there. I have a lot of good friends that work there as well. It's a fantastic firm. So I'm bullish on it because it is cloud-based as well. And they're growing like a weed. It's great. Yeah. I like it. Yeah. And they compete with, I guess they compete with Oracle because Oracle bought PeopleSoft, which was also founded by David Duffield years ago. And Oracle hasn't really done much with that product. They also compete with SAP. As SAP bought SuccessFactors. They're great, though. I think they're probably the best HR cloud-based software company on the planet. They're awesome. Yeah. All right, next up, Michael wrote, "I've been doing pull-ups and press-ups while watching." Awesome, man. Awesome. And I've got some, I got back to weights, doing weights a couple days ago, which is one of the reasons why I'm speaking fast. I'm happier. My shoulder's almost completely healed now. So, yeah, it's good to be back. Yeah. Awesome. All right, and I love doing two things at once, like exercising while watching TV or while working. Yeah, yeah. And so what I do, if you're curious about how I come up with the 7 topics every week on this webcast, what I do is I do it in my garage. I've got this big elliptical trainer thing and a big TV thing, whatever, and I type it all day the day on Wednesdays and get it ready. Yeah, it's fun though. Next up, Raj wrote, "Good morning, Chris." Good morning, Raj. Ever thought of changing your background color based on the type of topics you explain at the start, maybe based on the company logo or the emotion of the news? Just a colorful thought. No, thank you. I like the pun too. I've done that, and I'll show you exactly when I did it. So what I did was a while back, I did a webcast, and the webcast was just a webinar to explain my MBA product. Let's go to my channel here. Okay, where is it? Yeah, it was right here. Okay, and with this one, what I did, and let me make sure the volume is off. What I did was the background changed based on the color of the safe, right? See the safe there. So there it's gray, and then what I did was, let's see over here. Hold on. Whoops. Here I changed it to blue, and then I changed it over here as well. But I realized that. I like this background I have right here. I went for the Apple look as well. So what Apple does with a lot of their commercials, I'm just laughing at my face there, but what Apple does with a lot of their commercials, they use a white backdrop as well, which is what this floodlight is for as well. Yeah, but I always like blue. It's just me, yeah, because of the Blue Jays, who are kicking ass lately. All right, next up, Kazu wrote, "Will do." Absolutely looking forward to chatting with you over LinkedIn, brother. And if anybody reaches out to me and I don't respond, I'm so sorry. I get an insane number of messages. It's not because I'm ignoring you. Just ask me always on this weekly webcast, please. Thanks. Yeah. And even with LinkedIn, I can't even accept new requests anymore because I reached the 30,000 limit thing, I think. Yeah. Okay. Sarthik wrote, "Hey, Chris. Hey, man. Can you add Binance Coin to your cryptocurrency course dashboard? Also, would love some other updates." Yeah, absolutely. Thank you. I just updated the course, actually. And so if you purchase it from Udemy or my website, the dashboard's updated. Okay. I didn't add Binance Coin to it as well. But if you want to do research on Binance Coin, I provide you with a 49-step framework for how to do that. Thanks. But of course, I do talk about the Binance exchange. Yeah, thanks. And if you purchase the course through the New York Post or Entrepreneur Magazine or some other website, it's not updated through them yet, but it will be soon. Thanks. Okay, next up, Manas wrote, "My mentor, one very important question." Sure. I get before the camera every day almost. Cool. And it just jumped on me. Hold on a second. All right, hold on. I got to do search for camera. Find camera. Here we go. I get before the camera almost every day. And I can see that my nose looks too big on. Join the club, dude. But you know what, dude? These things are freaking aerodynamic. Like, you try beating me in skiing when I tuck or biking and stuff. You can't. This thing's aerodynamic, dude. It's awesome. Yeah. Yeah. You go, "I see my nose looks too big on camera. I see dark circles under my eyes. How can I solve this?" Yeah, absolutely. So what I do is this. Before I go on live, I put these little sticker things under my eyes. When you get older, you have to do this thing, which gets rid of some of the wrinkles, right? There's also a way to do the lighting that will kind of stop it as well, right? So if you angle, and this is going to be awful, but you'll see it you can see my eyes. You can see the lines under it. It's brutal. The way to get rid of that on camera, at least, is to have bright lights on the side, and especially one in the middle as well, if you can, or put your lights a little bit closer together. Make sure you stand far away back from the back here so that you don't get shadows on the back either. But it's all about the lighting as well. You play around with the lighting, and it can make you, it can change the way your face looks a bit as well. Now, there's also something called the Kelvin scale. If you have lights that go from a Kelvin of 3,000 to 6,000, you can play around with that as well to kind of change the way your face looks a bit, color-wise, yeah. But that's what I would say. Just move the lights a little bit on both sides, and that will help. Now, in terms of makeup and stuff, I showed this earlier. What you can also do is there's these really cheap things made by J&J called oil control film. And what you can do is there are these thin pieces of paper, and if you get rid of a lot of the oil here and around here, it won't stand out as much. And then if you want to lock it in so that it doesn't shine, you can put a little bit of this stuff on. Yeah. Now, I didn't realize this, but when you go to the drugstore to buy this stuff or whatever, you have to get it to match the color of your face, right? So it's a little bit darker. It's not completely white. And that will help as well. Yeah. Yeah. And if it's like if I cut myself shaving, which I've done many times before going live, and I have a buddy named Nick, and I said, "How did your dad come up with that name?" And he said, "Oh, he thought of my name when he was shaving." Bad joke. But it happens to me sometimes. So what I do is I have this little. It's a cosmetic thing that's a little like this kind of, and I rub it and then put it over top it, and then you can't see where I nicked myself shaving. Yeah. All right. And there's also creams you can get, dude. Like I talked to my wife about it, where if you have dark circles under your eyes, it'll kind of cover it up. Now, if anybody's going to an interview, what you can do is you look tired or whatever. I have this little rollerball thing made by L'Oreal that it's got clear caffeine in it. So you put the caffeine under your eyes, and what happens is it gets rid of the lines completely. Caffeine does that. And people do egg yolk and stuff. I'm not going to do that crap ever. People use cucumbers as well. but that little roller ball made by L'Oreal for men does that. It's great. Yeah. And let me actually show you that really quickly here, because I think it's something everyone should have before an interview. Let's go here. And I'll go to my orders in Amazon. Oops. Here we go. Hold on. And I'll show it to you. All right, so let's go here to L'Oreal, I think it's called. Here it is here. Yeah, this is it here. All right, so what you can do is, this is the product. It's called L'Oreal Men's Expert, okay? I purchased it a lot. And so what it does is, it's just a little roller ball. It's a small thing. And it gets rid of dark circles and bags under your eyes, whatever, right? It's just, all it's got is vitamin C and caffeine in it is as well. Yeah. So that's how it works. Yeah, it's just a little roller ball thing looks like this. Yeah. I've made every mistake there is to make, which is why I don't mind talking about this stuff. All right, next up, Sarthik wrote, what would you advise an undergraduate to do for his future? I'm an undergrad in my home country, but I'm planning to do a master's in the United States later. Thank you. Yeah. It all depends what you want to do. So I would find icons in business, people you look up to, and then go to their LinkedIn profile and see what they did to get to where they are, and maybe emulate that. Maybe. That's what I think about. Now, in terms of, let's say that you live in one country and you want to leave that country to work in another country. You don't need a degree to do it. All you need to do, the best way to move to any country you want to, is in your current country, whatever it is, get a job at that company whose headquarters are in the other country you want to move to. And work really hard, do really well, network, all that good stuff, add value. And eventually what happens is, as you move up the ranks, at some point, they ask you if you want to transfer to the mothership, meaning the headquarters in the other country. And they'll pay for everything, right? The visa, moving, everything, if you do well. Yeah, it's possible. Anyone could do it. All right, next up, Sarthik wrote, how come I hardly see any stock go up 1% and 2%, while cryptos go up 7 to 10%? Then you wrote, sorry if this sounds dumb. No, not at all. It's a very smart question. And you wrote, I don't know much about stock. I'm a crypto guy. Yeah. So the more speculative and risky the investment is, in any market, it doesn't have to be stocks or crypto, but the more speculative it is, the more volatile it is. It goes up and down a lot more. Okay, because some people think, hey, it's a great business model, and other people think, oh, it's crap, I'm going to short it, for example. And so there's a lot of speculative crap out there in cryptos right now. There always has been. Yeah, there are a handful of great cryptos I own I'll never sell. But there's more risk. There's more risk investing in cryptos than a lot of stock markets. However, if you invest in penny stocks on the stock market, those are really volatile as well. They're really risky. But if you look at like the S&P 500 stocks, this 500 stocks that make up the U.S. index, a lot of those companies have been around for over 100 years. So they're not speculative, right? They don't grow as much, but they're not as risky, so the stock doesn't go up and down as much like cryptos do. Yeah. All right. Yeah, and Kazu is right about risk and reward. Next up, Naveed wrote, hey, Chris, hope you're doing good, likewise. I have a question for your option course that you, if you teach strategies like straddles, strangles, practical examples, also some guidance on practice platforms tests. Yeah, absolutely. I'd love to answer that question. Yeah. So the way I set it up is I architected it so it works in every country. Look at me buying time to find Excel. I do have, I teach everything. Hold on a second. I got the wrong damn screen there. There we go. Sorry, I was using the wrong monitor. All right. And this is not the final version yet. And I'll just zoom in here so you can see it a bit here. Okay, here we go. But in section 3, I think it is. Yeah. Section 3, I start off with the easy stuff, then I do the advanced stuff. Okay. So I do leaps, okay, married or protected puts. Here I do the long straddle, okay, covered call. And there's a reason why I have hockey pucks. And the reason I have hockey pucks is because And the hockey analogy is because when you buy stocks, you're trying to make money. It's offensive, like scoring a goal. With certain options products, you're trying to make money and protect money as well. That's a goalie. Okay. So I got covered call, long strangle, which I think you asked about. I'm doing short call, short put, bear spread, bull spread, long butterfly, which I'm still working on, short butterfly, long iron butterfly, short iron butterfly, short straddle, long straddle. And I think I got to put in the iron condor or something as well soon. So that's what I'm working on right now. Yeah. In terms of platforms to practice on, here's what I recommend. And I make a small part actually of the program, just a little fun button here. Paper trading using a virtual private network. And the reason why you have to use a virtual private network in some countries is because what I'm about to show you, you can't do in every single country. But if you set up a virtual private network like I do, then you can go to any website in any country, download any product. Okay, so here's how you do it. So there is a company called TD Ameritrade, it's Canadian, represent, and they have this product called Think or Swim. Think or Swim, here it is here. And you can download this from TD Ameritrade's website. Now, you can, when you log in, you can do live, and it's free. Anybody can do this right now. And if you can't do it, use a VPN. But you can do live trading or paper money trading. Okay, and when you start with options and advanced financial instruments, please don't ever, ever, ever start trading real money. I want you to practice for at least 6 months. So let me log in here, okay? Okay, I'm gonna log into paper trading here. And what you can do with this platform is you can actually transact in options and any financial instrument you want with real money or paper money, right? But in order to open an options account, you have to have certain criteria, which I won't go there today. But here's what you can do. You can trade options. So for example, we're looking at Apple calls right here. These are in the money for calls. These are in the money for puts. And here's the strike price, which I'll talk about in my course in more detail, right? And then what you can do is you can actually transact and buy any of these. Just click here, buy, single, spread, whatever, all this stuff, which we just covered. Iron condor, I got to add that. So if we just buy options here, you can do it. I won't hit the confirm and send button, but you can do that. And as you know, whenever you buy options, it's always in increments of 100, right? So you multiply by 100. So that's that. Now, what you can also do, and what I teach in the course is when you start off with options, the best way to do it is actually to look at Yahoo Finance. This works in India and all countries as well with options. So you type up any ticker you want, right? So let me do it without looking. Okay. Right here, so the Yeti Holdings. I don't know what the hell that is. Okay, so I type this here. And if it has options, you will see here, options. Here it is, okay? So what you do is you look here in options, and let me zoom out slightly on this to get more real estate. Here we go, good. And then what you can do is you can look here. These are calls, okay? Down here are puts, okay? And whenever you see shaded, it means in the money, not shaded, it's out of the money. And so when you look here, you can actually look to see the dates when these options expire, okay? And so you go here, and so we're looking at the Yeti, September 17, 2021 call with a strike price of $60 right here, okay? And you can see liquidity and volume and open interest, okay? So anyway, hopefully that's helpful. And the spreadsheet I just showed you, I price every type of option on the planet using calls, puts, for international stocks, domestic stocks, everything. I think I humbly nailed it, I think, using 3 methodologies. You know, one is Black-Scholes. The other one is, which took me 8 million years. One is Black-Scholes. The other one is binomial pricing. And I've got Monte Carlo simulation as well. Yeah. So, and I made these, there's beginner level to this course and genius level. These are more advanced given the statistics and stuff. Yeah. Yeah, but if you're interested in, actually, I'd really appreciate your help, please. It sounds like you're pretty sophisticated with this stuff. Naveed, if you want, what you can do is please just send me, email me at support@harounventures.com, and I'll send you a version of the spreadsheet, a little bit nicer version. I'll pretty it up. This is pre-beta. I'll send you a version of it, and then you can test it and see if you can poke holes. No one's ever made a course that teaches options the right way, in the most simplistic way. And what I've done is I've got so many props like I always do, and this is a little bit out there, but I teach it using building blocks. Okay, so we first of all talk about what's a stock really quickly, and then we build on that. What is volatility? We build on that, and then we talk about, and everything's color coded too. You'll see as well. What is standard deviation, and then we build on that. What's the strike price? All that sort of thing, right? And so rinse, lather, repeat, and all of a sudden you're like, oh my God, I can do this. It all makes sense. And when I went to Columbia for my MBA, I majored in finance. I humbly got the top grade in the options class I took, but I didn't understand a damn thing. I was just memorizing it. And the way it's taught is so complicated, man. So I'm trying to figure out a way to teach it in such a way that's fun, engaging, and simplistic to understand with building blocks as well. Hence all the little Lego images you saw in that spreadsheet there. Yeah. All right. All right. Next up. Okay. Watts number wrote here, facts. Stocks only go up. I love it. You gave me a couple in this market especially. I love how you wrote facts because my sons, these guys on the outsides, Andrew and Matthew, they're a bit older now. They always say fact. Yeah. And my middle, and what the younger generation, what they're saying now is every second word is bro. Like every second, or dude. And Dylan, my youngest one, said it to Christine. My wife keeps saying bro, dude. And Christine's like, I'm not your bro. I'm not a dude. I'm your mother. Yeah. And my kids are binge watching The Outer Banks. I'm sure some people here are watching it. Season 2 just came out. Every second word is bro. Yeah. But they say facts a lot as well. Yeah. And Whatsember wrote, the love of money is the root of all evil. Amen to that. Can't beat him, Jorna. Yeah. All right, next up, Fudik wrote, hey, Chris, if I had an LLC, for those of you not familiar with LLC, it's a limited liability corporation. Basically, you set it up so that your liabilities are limited if, God forbid, you get sued. Yeah. And give me 1 second, guys. I haven't checked on the quality of the webcast today. Let's see here. Okay, good. We're good. All right. So if I had an LLC and a website with video content, what is legal stuff I have to be aware of? Like top of my head, trademark, copyright disclaimers. What else should I know before checking with LegalZoom? Yeah. So what I would say is images you use, if you want, you can license them. YouTube, it's kind of like the Wild Wild West right now. If you have a celebrity that's on your thumbnail image, nobody says anything. It's cool. As long as you're not spreading misinformation or mean stuff about celebrities, for example. If you use any videos or music that you didn't license in your YouTube video, what happens is YouTube will tell you one of two things. Number one, you can't monetize this because somebody else owns this content, but you can still have the video up. Or number two, you get a takedown notice. And if you don't take it down, then you get what's called a strike. And if you get a couple strikes, you're out and you lose access to your account, which is brittle. But for example, you'll notice at the end of every one of my webcasts, I show a Steve Jobs video. And I licensed the video from the Silicon Valley Historical Association. And every time it's on, and they're great about it too. They know the second it's played every week. They see it, which is why I put the disclosure there as well. You have to. Yeah. So that's what I would say. Yeah. Yeah. Cool. In terms of copywriting your stuff, what you can do is this. So I copyrighted trademarks. Oh my God, I can't stay with me here, folks. Sorry. I copyrighted and trademarked all my stuff. And let me actually show you how to do that. Okay. So what I do, let me just clean up my desk here. What I do is I went to LegalZoom initially. Okay. And what LegalZoom does is they have lawyers that they don't charge much. It's a good deal, actually. And if you want to trademark something, you go to uspto.gov, okay? That's the United States Patent and Trademark Office, okay? So there's two websites. One is for patents and trademarks, this one. And another one is for copyright, which is copyright.gov. We'll go there in a second. And when you're here, what you can do is you can do a search. Hold on a second here. How do I do search again? Trademark. Here we go. Searching trademarks. Yeah. You can do a search, right? Before you start your company and you want to use a certain brand, you can search here first. Okay. So what you do is you do a basic search here. So for me, Haroun, is that how you pronounce that? Right. So I've got here all of my more recent things that I've trademarked. So trademark means a brand name, right? So nobody can use a brand name, this brand name. So for example, here, Haroun Education Ventures, if I click it, I own this, right? The logo and the name as well. And you'll see here they're all live except for one that's dead. And I'll tell you why it's dead, okay? So what happened was I created this course called the Complete YouTube Course. And I wanted to register the name. And what happened, when you register a trademark, what happens is the government looks at it and they say, okay, it looks good to us. And they put it up on the website here, the trademark website. And it stays up for about a month or two. And the whole world can look at it. And if somebody contests it, then you can't publish it. So what happened here was Google, which has more lawyers than I do, Google saw this and they very nicely reached out to me. And they said, hey, we own the rights to the name YouTube, so you can still keep your course up. Don't worry about it. But you can't trademark the name, which is why it's dead right here. Okay. So, but the great thing about doing this is you could find out the competition strategy, the competitive strategy of other companies. So Microsoft, for example, I did have logs not too long ago. But if we go here to Microsoft, let me go over here. Start from scratch. Yeah. So let's go to Microsoft trademarks. Okay. And I'll get rid of combined. Wow, they put a lot of stuff in the past couple days. Okay. Let's see here. So, okay, so there's this Azure Percept. What is that? Okay. All right, so this is basically, I guess, some sort of one of their cloud offerings. They're trying to register it. You'll see here that they register them and they actually don't use it in real life until it's been approved. So Windows 11, which is disastrous but live right now, they filed this back in June 24th. Okay, and it's now live. They own it, right? But what happens is it can be up there for a while until if anybody tries to whatever, say, hey man, it's mine, you can't use it, that sort of thing. Oh, here's what I was looking for, Azure Orbital. This here is a cloud-based satellite offering for Microsoft Azure. And they filed it. It hasn't been approved yet. This is what I'm looking for. They filed it December 23rd. It was published for opposition on July 20th. Okay. So if in about 6 weeks, nobody opposes this, then Microsoft gets it. However, this is important because you could see Microsoft's strategy right now before they even release this product. So that's trademarks. So trademarks is when you protect the name of something. Copyright's a bit different. Copyright is when you want to protect a movie or an online course or code or music, right? And so what you can do is you can copyright your stuff here as well. And this is a lot cheaper to do copyrights. You basically send in a USB token with the lowest resolution possible of all your video and stuff. And it costs less than $50, I think, to do it. So what you can do is you can search here for stuff that's been copyrighted. So if we search for me, let's see here. Well, it's Haroun in the Sea of Stores. That's Salman Rushdie, who I do not want to be associated with. Let's go here to name. Maybe it's here. Let's try this. Here it is here. Okay, good. Yeah, so for example, an entire MBA in one course. So, and I've got plenty more that are filed and done. So if I do a search here, I see here that this was filed, I created this 2016. Actually, that's not right. I actually created this 2016 because I published the course at this point. And it got approved. So nobody can use entire MBA in one course, the brand name, or even the content of my course. And I have everything else copyrighted as well. And sometimes people actually do republish my stuff. And so what I do is I issue them a takedown notice. over, and YouTube's great partnering with me doing that. If they republish my courses, so that they have to take it down within a couple days, or their channel gets a strike. Yeah, I got to protect my moat, my business. All right, next up I've got David Yerman. How are you, dude? And David wrote here, and I've got about 4 minutes left, guys, and I got to wrap it up. Sorry. David wrote here, Chris, good morning. Hope all is well. Likewise. I had to snap back into it because I've been exhausted with the new baby Benny. Oh, congratulations. I remember that, Benny. Very cool. Very cool. And then you wrote, I'm happy to say that I'm up to 13% done the MBA course. Gotta go hard. Awesome. Thank you. Congratulations on the baby. If that's your first baby, you'll know when I say that the second you hold your first child for the first time, you unlock a level of happiness you never thought was possible. It's amazing. Congratulations. Enjoy every second, dude. They grow fast. They grow fast. Enjoy. And by the way, by the time your kid is 12, you've already spent 90% of the time you've ever spent with them. However, because of COVID, I'm stuck here with my kids at home, it's been okay. It's been good. When life gives you lemons, you make lemonade. But congratulations. Congratulations. All right. Next up, Kazu wrote, the reasoning in Windows 11 is ARM architecture. In other words, they're showing their new target, main hardware. Yeah. And so what Kazu is saying, so ARM it's a British company that makes a special chip. And a lot of smaller form factors devices use ARM as the processor instead of using Intel or more pricey AMD chips. And so Windows 11 works better, more architect to work with ARM, as Kazu said. I didn't know that. Thank you. All right, next up, David, who's now a proud father to Benny. David wrote, ever since I was a kid, my teachers would tell my mom at parent conference, David has a tendency to help other students before he completes his own work. Awesome. I always want to help others. Gets me in trouble. Good for you, man. I love that. I love that. Good for you. That's a gift you have, to want to help other people. And I really do believe if you give, you'll receive. It's prophetic. It's been true since the beginning of time. And for me in my career, humbly, I've done okay, whatever. A lot of my successes have come because I've mentored younger people. And years later, hey, here's a good stock tip, whatever, a customer, that sort of thing. It works. And there's a great book called Give and Take. And in that book, the author looks at random samples of people all over the world. And the bottom 1% of people in the world by wealth are people with beautiful hearts, like my idol Mother Teresa. They give. Okay. The middle 98% of people in the world are takers. Most people take. The top 1% of people in the world by net worth are givers. A lot of people that become very successful, they've helped other people. They just want to help. And give and you'll receive. It's prophetic. It's been true since the beginning of time. Last thing I'll say there is that don't expect to accomplish your dreams in life unless you help others accomplish theirs first. David, God bless you. I love that about you. Thank you. Next up, we've got What's Ember wrote, R.I.P. rest in peace, John McAfee. Yeah, John McAfee, he started McAfee Software, which one of the biggest antivirus companies that Intel eventually bought, so that they could take some of the patents actually that were filed by, and I know this because I asked the CEO of Intel about it after the deal. They took some of the patents from McAfee, especially their sniffer product, to be able to make these things more secure. Yeah, and he passed away. He was certainly misguided. Next up, Pearl wrote, Windows Vista was a real disaster. It was awful, dude. It was brutal. I remember I bought a computer then we had an au pair in the house from Office Depot, and I returned it because Vista was just disaster. Disaster. Yeah. Whoops. All right. That's my alarm saying that I've got to wrap up the call. But before I do, I have to ask you all a question. And whoever answers this question correctly, that scared me, man. Whoever answers this question correctly will win the MBA Degree Program, the $999 version. Now, the way it works is I'm going to ask a question, and it's always based on the stuff I taught in the first 7 topics of each of the webcast. And you can't answer this question if you've already purchased the MBA program. And whoever wins, you're going to send an email to support@harounventures.com, and I'll personally respond and give you for free my MBA program. I'm buying time here to think of what question to ask. Okay. All right. Let me think about this. Let me think really hard. Okay, what did I talk about this morning? Okay, here we go. Whoever types this first, and if it's two people at the same time, whatever I see first come up wins. Okay. I talked about how Reese Witherspoon sold her company called Happy Sunshine or whatever. She sold it for like close to $1 billion to Blackstone. I also talked about one reason why she's so successful, and she talked about this one reason. What is the one reason that Reese Witherspoon is so successful based on what I talked about? Go. And whoever answered it right first, you'll win my MBA program. Again, don't guess if you've already taken my MBA program. Yeah. And by the way, I see there's tons more questions. I'm so sorry. I have to wrap up the call now. Please copy your questions and ask me again next week. All right, let me see who got it first here. Yes, Victor got it. She reads a lot of business books. You are correct. Leaders are readers. She's a voracious reader. Excellent. Good stuff. Okay, so the winner is Victor. Victor, please email support@harounventures.com and mention that you won this. And what I'll do is I'll personally reply to it and send you the MBA. So I want to thank you all for your time this week. This has been a lot of fun. Every week is fun. Every week we push the goalpost out, and try to make it more funner. If you subscribe to my, if this was helpful, click like, please. It'll help us. Click like. If you subscribe to my vlog, I'll see you every day at 9 a.m. my time, which is when my vlogs drop. If not, God bless you. Have a great weekend. And I'll see you next Thursday and every Thursday forever, starting at 8 a.m. San Francisco time. Thank you, and God bless you, and have a healthy, happy, and blessed weekend as well. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.